This isn't plugged. My sound is plugged in. Oh, crap. Okay. Hey everyone, Mike Rosehart finally here for another installment of Wise Wealth Wednesdays. I'm sorry I am late. We are 13 minutes late. As you guys can check out my Instagram stories, you can check out on Facebook. Hey Jonas, how you doing? I literally just biked 9.9 kilometers uphill from downtown London on my bike. So I am just tired. I am tired. Hey guys. Hey Tommy. Hey Michael. Hey Jonas. The regulars are on. I know I'm late and I apologize. How is my sound check? Are we doing okay? Can people hear me okay? Are we good? Is the lapel mic in a good spot? Like I was saying, guys, literally just biked from, hey Tagger, how you doing? All the usuals popping on. Of course, I closed another deal this week. You guys want to hear about the deal I closed this week? I'll tell you about it in just a minute. Yeah, I bought another house this week. Every single week, trying to buy a house every single week. 52 houses a year. 52 houses a year. So the story I was telling you guys about, I was checking out L Furniture Warehouse, which is like this really cool place that started. It's not what you'd think. Hey Green, how you doing? It's not what you'd think. It's actually a restaurant. And everything on the menu is $5.95. I'm talking full meals for $5.95. And I went with the burger and fries. Next time I'm going with the fish tacos. Regret for not going with the fish tacos. But had to bike all the way back. And I'm thinking, I'm not gonna make it, guys. I realized it's like 6:27. I'm like, I don't know if I can make it 10 kilometers uphill on my bike in time. And so you guys can see, check out on Instagram after this video. Stay here for the live stream, but after the stream, check out, I did a live stream for like 25 seconds on my bike while I was powering up a hill there, just finished. So check that out. As always, shoot your questions into the chat down below and I answer every single question, every single Wise Wealth Wednesday. I've never missed one. I have been late, unfortunately, but I've never missed a Wise Wealth Wednesday. You guys might notice also, I got a new phone. And so I have a new iPhone and the quality should hopefully be better. Hopefully the quality is a better with the new camera, like the 12 meg pixel camera. We've got good lighting. We've changed up the scenario where I'm sitting now behind a different set. So you got some depth behind me here, which is kind of cool. Instead of my whiteboard that's over on the other side of the room, we're trying out this new spot. We've got the lights in here. You guys can see just how tired I am from biking. Hopefully it's nice and crystal clear. So let me know if any sound or video issues. Now that I've had a chance to like breathe, because I literally jumped off my bike, ran in the house and plugged my phone in and got ready to stream. Now that we're here, let's talk about what I've been up to, because I always start, you guys know in the first 5 minutes of Wise Wealth Wednesdays, I just ramble about nothing, giving you guys a chance to put questions in at the bottom so we can get that interactive discussion going. So what did I get up to in the last week? What has been going on in Mike Rosehart's life in the last week since we last chatted? I have a friend fly in on Friday from Vancouver who's been staying with me. We've been having a ton of fun. We're university buddies, and it's been great having him stay here with me. And so we went up to my cottage just out to Blue Point area between Grand Bend on Lake Huron. Beautiful, beautiful opportunity. Unfortunately, it rained most of the time, so we didn't get a lot of chances to swim, but we had a ton of fun. My daughter, my wife, we just had a really good weekend. Between fielding calls, because literally my phone does ring. I'm probably texting and calling, I would say 3 to 4 hours a day, minimum. Minimum, my phone's ringing with contractors, investors, with deals and all that kind of stuff. Yeah, I'll check out some of these questions here. Let's start hitting these up. So what is up? The regulars are all on, as always. The loyal fans, even if I'm 10 or 15 minutes late, they still pour in. So thankful that everyone is here. I will go a little bit late today answering questions with you guys because I was a bit tardy, having biked all the way back. I probably should have drove, but I like to be frugal. Back to my roots. I love just having a good workout. Like after a solid meal, it's nice to have a good workout. So I biked back and now I am out of breath, but I am obviously in better shape than I would have been had I not done that amazing bike ride. So what did I get up to? Let's keep going with the story. So I, just killing things and getting a lot done at the cottage. Was working on some projects out there. You guys know I have a property out there. I've probably told you, a little over an acre and a beautiful 1,900 square foot bungalow that I Airbnb. So we were getting it ready for the next Airbnb stay, getting it prepared. I was going down and there was a path down to the beach, and I was trying to clear that path and put signs up so the Airbnb guests could find it. So getting that ready. And as you know, I've been working with the municipality in the area on severing the lot. It's over an acre, and severing it into 4 lots so I can build 4 cottages out of it. So hoping to, I bought it for $425, hoping to invest about $500,000 all in, and then have a cash out of $2 million. So the goal would be to make a little over $1 million. I have a partner on this project, so I'll get half of that, but they're a local partner, and so it was a strategic decision. It wasn't about capital really at that point, but really cool project that I've been working on. So I pushed the needle forward with that. I've met with the municipality and the utility works, public works people, as well as discussing some of the land and the drainage and how to service the lots and run sewer to the lots and water and hydro and all these things. It's just really cool. So been enjoying that, and then came back and I've been working really hard on some of my rental projects. I did a video for you guys today. I'll upload it tomorrow. It's more with my phone. I literally walk through my project like selfie mode with the new phone and gave an update on what's going on. I'll probably drop that video tomorrow. I don't suspect it to be a hugely clickbaity video, but for my core following, I think you guys enjoy the update on that project. You remember that was the one with the lightning bulb that burnt out, and I walked you guys through. It was all gutted. We had water issues. It was the one I was in the trenches where I was on the outside of it. That's all filled in now. So we're getting some solid progress. In the next 2 weeks, I'm going to button this project up all the way done. Same with another one, and then I'm starting 3 more. Hopefully I get these done in time to start the new ones. Always looking to hire new people. I think I got a couple new people on the team now to replace some contractors that are no longer working with me. But on the weekend, while I was killing it in Grand Bend, got an offer on a property, and this is an interesting one. This property is one of those kind of properties you just want to own. Like when I started investing in real estate, I could have never afforded a property like this one. And it's a beautiful 3-story brick, 3-story plus a basement. So it's got 4 finished levels, right downtown London, beautiful. It's not marketed very well, a bit of a stale listing, managed very poorly. Like there was 2 tenants in the upper. There's a 4+1 upper unit. This is a legal duplex, rental license on it for 6 beds and 4 beds. So 10 bedroom rental license. That's grandfathered. Beautiful. Those licenses are very, very valuable. So that was very cool that it's been grandfathered. Legally separated, like 2 separate hydro meters, everything done really properly. 4 bath in the home, 11 beds, technically 10+1. Beautiful, beautiful heritage property. Has a lane driveway off the back of the house, so it has a huge detached garage. Just a beautiful property. Picked up for $458,000 here in London, but just beautiful, you know. Jason, hey, welcome on. I just saw your message pop up that you're skipping supper. That's sweet, awesome. You know what? I say eat and watch. Why not eat and watch? So talking about this deal that I picked up, because I'm trying to close 1 deal a week, as you guys know. Some weeks it'll be 2 deals, some weeks it'll be none, but on average I want 1 deal a week. With investors. So that's the growth target right now, is buying 1 property per week. And I'm probably getting my real estate license. I don't know if that's something I should be doing, but might just get it, just have access to information and access to more up-to-date pocket listings and just building my network. And I've always just wanted to have it, so I'll just grab it up. But this property we're talking about, is specifically beautiful heritage property, $458,000 we picked it up for. And it's one of those properties I've just always wanted to have in a portfolio, because you drive by and you're like, look at this majestic, like turn of the century, solid brick, beautiful building. You walk in the foyer and it's got like the original vestibule. You go in, you got the beautiful staircase, 10.5-foot ceilings, just beautiful, right? And it needs a small bit of cosmetic work. The lower 6-bedroom, 2-bath unit, fully vacant, poorly managed. The upper unit had a couple of guys in it that they wouldn't fit with the student market. They're not going to get top market rent, and they're detracting from the ability to rent the unit out, right? And they're doing by the bedroom, which I don't do. You guys know I do groups. Groups are way easier than by the bedroom. If I can, I'll just put 2 groups in, boom, nice and clean. And we're looking at $5,000 a month in rent. So $5,000 every single month in rent. The numbers were so sweet on this one. For $458,000 buy-in, talk about $5,000-$10,000 in renovation, cosmetic. I'm gonna do a new back deck on it, some small cosmetic stuff, put some dishwashers in, so each unit has a dishwasher, new stuff, new washer and dryer in the lower unit, some small stuff, right? A little bit of paint, whatever. But just think, beautiful. Like imagine we're talking $60,000 in gross revenue annual, like at least. What should that sell for in this market? Well, if we do the numbers on an 8 cap rate, right, and you do the numbers, it should sell for around 575 to 600. So I believe that once you get some good tenants in there, do some small cleanup, this 458 property will be around 575 to 600 valuation. And when you run the numbers, what you'll find is that with mortgage paydown, you're looking at a profit each and every month of like $2,400 after management fees, after my management fees, which is intense. Like, imagine buying 2 of these properties. A down payment on a $450,000 house is less than 100 grand, 20% down. So we're talking like 100 grand down is getting 2,500 a month in profit. That is intense. So investors picked that one up. I'm really excited it's going to be their first deal with me. So I'm really excited for that. That project. That was one we snagged up this week. That's deal number 6 technically within the company that I bought recently. Or started incorporated recently, right? So 6 properties within the company now, and then my partner and I each have our own portfolios collectively as well. So that'll probably put me at, I bought over 25 properties now in total. I think I'd have to count. I don't know. I'd have to count, but just crazy, guys. How excited I am for this project. It's always one I've just wanted to have in my portfolio, a big, beautiful heritage property, and now to have a part of that is beautiful. Addition to the property. Hey everyone, I see more people floating in. Awesome. Let's start hitting these questions because that's what's been up in my week. I've been busy. We had a property close. One of our earlier deals I talked about near Fanshawe College there. It closed and we rented it. We were targeting for $1650 a month plus all utilities. We rented it out for $1825 plus utilities. Above market rent. Really excited about that. To a nice group of Fanshawe students. So beautiful turnout. Really happy with how the week's gone. We've made a lot of progress this week. Because we now have the property management company, Right Way Management, we've been scaling that up and building the systems and things like that and getting things in place. Really in its infancy stage, but as we grow and build revenue and buy more properties, we're going to need to then hire people and build teams and really grow more robust systems and things like that. So really excited for some of the things that have come down the pipeline in that area. Yeah, I am a little bit sick. I'm probably 75% better. I just biked like 45 minutes, so I am better than I was, but still, if I clear my throat, it might be a bit better for you guys. But let's start hitting some of these questions. Let you guys know what's up with me. Tell me what's been up with you guys in the last week. Drop it in the comments. If you've been working on a project or you're analyzing some deals, whatever, throw that out there. If you have something to add to that I didn't think about either too, I love to learn from cross-pollination. If it's a topic that maybe even I don't know the answer to, we can discover the answer together on the stream. So let's go on. Start hitting my intro rant. Okay, hey Mike, what cap rates do you get in London with today's prices? Tommy asks. So Tommy, it does depend. You get a real variation depending on the quality of the property and the location. There's a number of factors that come into play, right? So in East London or in a rougher area like Soho, you're going to get a higher cap. So you might be buying like 10 cap rate type properties because these properties tend to be in poor areas that get poorer tenants. The reason that these properties trade at higher cap rates is, of course, you have the trade-off with worse tenants that are less likely to pay, less likely to maintain the unit, less likely, probably more likely to take you to the landlord-tenant board and you'll have issues with. A lot of the downsides that come with that, they're harder on their units, but some of those properties can be cash cows, so don't discount, the area just because, it's not it's a C neighborhood. Doesn't mean there isn't still a deal in a C neighborhood. Even though I prefer, the B plus neighborhood, the A neighborhoods don't work. Like in London, the A neighborhoods, the best neighborhoods in London, like Old North and Northwest London, and there's some spots in South London where there's really nice houses. Those numbers just do not work. We're seeing $500,000, $600,000 houses renting for $1,900 a month, which is like Toronto type cap rates. Just terrible. I'm actually looking at renting a property in these areas because I don't want to own property in these areas, but I want to live there. I would love to live in these nice neighborhoods where there's, $700,000 houses and everyone's, a doctor, a lawyer, and a dentist or whatever, they all have got great incomes, they drive nice cars and beautiful houses, but it just doesn't make sense. Like the higher caliber tenant, it's crazy. Double the size house rents for $200 more. Like we're talking $1,900 a month versus $1,600 a month, $300 difference between a shack in East London, like a 2-3 bedroom shack and a 7 bedroom, like huge house. It's just crazy, the arbitrage opportunities that exist right now. And that's because With the crappier end tenants, what you find is that they destroy the units more often. You have more vacancy, all the crap that goes along with it. When you put you need to build in that margin. As the landlord, you need to build in that margin. You know, amazing, Jared. That's awesome. You've been networking. I'm gonna get the rest of your question in a second here. But just, you know, that lower end tenant, you have to have that huge margin there for when they screw up your unit, when they don't pay. But the executive level tenant, the tenant that's got like 10 years rent in reserves or has that income that's, you know, 6-figure income, they can easily afford the rent. Those tenants, they tend not to be delinquent. They tend not to want to go to the landlord-tenant board because they have full-time jobs. And you think it's worth their time to stand at the landlord-tenant board? It is for someone who's on welfare or someone who's poor. You know what I mean? It's worth their time to go and fight the landlord. But the wealthier executive level tenants take really good care of homes. They're afraid of being sued because they actually have something to lose. And so they take really good care of the house. You don't have a lot of maintenance issues. You don't have any issues collecting rent often. And so they can offer a $600,000 house for almost the same price as what you can for a $200,000 house, which is crazy. It shouldn't work that way, but it does. That's just, you know, that's just the way it is. But I guess at the overall, back to the question, what are the cap rates like in London? We see anywhere from, I've seen 5 cap rates selling to investors from Toronto, properties near Western University right at the gates, or right downtown Richmond Row. I sometimes will see really nice properties, like super mint inside. People walk in, they feel really comfortable with a really nice property. And people are sold emotionally when they buy real estate. People think, they ask themselves, everyone always asks themselves, like, would I live here? Is this good enough for me to live here, or my family, or my kids? Those are the wrong questions to ask. The questions to ask are, does it cash flow? What's the ROI? What are the numbers? And so people don't look from the numbers, they look from an emotional perspective. And so those buyers drive really nice houses up into the 5-6 cap rate, which is terrible. On the other side of things, in London, you know, we're talking like a kilometer away or in the same neighborhoods, I also see properties sell at 10 and 12 cap rate. I've even seen properties sell at a 15 cap rate. And the reason they're selling at these rates is the agent has underestimated the amount of rent that's possible. So it's a 3-bedroom, and they underestimate the fact that you can turn it into a 5-bedroom and get more rent out of it. Or they underestimate the fact that there's an unfinished basement you can turn into a second unit. And so they don't factor that in. So after you renovate it, there's a way to unlock that 15 cap rate, even after you spend the money to renovate it. So there's arbitrage everywhere. It's a wide range. Even within London, some people say, oh, London market's too expensive. You can't generalize like that. Like, London is such a diverse market. I'm seeing properties, I bought properties for 125 grand. They rent for 1,600 a month plus utilities. I mean, you can't tell me that's not a good deal. You won't even find those kinds of, like, those are the kinds of deals you'd find in like Windsor or other markets, and you can still find that at London. So there's nothing wrong with London, I think. It's a really diverse market. We have universities, biggest college, one of the biggest universities. We do have the biggest college, I think, in all of Ontario, here in London, Fanshawe College. Tons of different employers, a lot of tech downtown. We have some financial, a lot of manufacturing, just a lot of diverse employers within this market. Unlike someone like Windsor, where it's just like manufacturing and they have one like university, but it's just not the same. I'm not crapping on Windsor, just one example that's top of mind right now. There are a lot of small towns too, like Sudbury and way up north and stuff like that, where these towns are reliant on like mining and forestry. And if like the NDP government, the socialist government, got in for even like one term, it could destroy the whole town, right? Something as simple as a government change or a regulation change where they put a tax on mining, or a new clean energy type bill or something that bankrupts manufacturing or mining or forestry in a small town like that, you're screwed. So that's the risk, I think, of investing in smaller towns. I definitely would pick a bigger town if I was going to invest. The problem with like Toronto and places like that are that the numbers just aren't very good. You're relying on appreciation. And if you follow a lot of the data, not that I do follow a ton of it, but we've seen prime interest rates, you know, creeping up. Bank of Canada has been announcing some stuff that seems to be a signal for recession coming. So I think that a recession is coming. We are definitely due for a recession. You can ask me a year ago when I sold a lot of my properties off, I said to myself, I said to a lot of people, I said, within 3 years, we will have a recession, 100% in 3 years. So I do believe that is still true. It might be like 2 to 5 years, I don't know. Probably like 2020, 2021, we should have a bit of a recession. I think London stands to fare fairly well through this recession, whereas Toronto and Vancouver will be hit the hardest, I think. Much, much harder than London will be, because we have a certain floor, right? So yeah, anyway, I'm getting off on a tangent like I always do, talking about cap rates. Yeah, I mean, I'm still bullish on London. I still have a portfolio in London. I wouldn't put all of my wealth into one type of property, like student property. I would be diversified in the types of properties that I held, in the areas in which I held those properties. I wouldn't just hold real estate. I'd diversify my portfolio a bit. I think it's too risky to have all of your eggs in one basket. Make sure you use your TFSA and your RRSP. Those are tax vehicles you need to take advantage of. So, buy some exchange traded funds, some ETFs, and buy a piece of the stock market, right? Go buy some Vanguard ETFs. Look up couch potato, like the lazy couch potato, and look at some of the strategies they have for passive equity investing. I'm not a big fan of bonds because the data shows, if you're looking between equities, so like equities meaning publicly traded companies, right? Owning pieces of publicly traded companies, pieces of companies, you own a percentage of their profit, percentage of their assets. And then there's bonds, which the bond market is like debt. So you can lend to a company or you can buy ownership in a company. We're talking publicly traded company or private company. And there's publicly traded debt, which is like the bond market, right? And then there's different grades of bonds, everything from like AAA all the way down to junk bonds, right? And then in the equities market, you've got different types of equities, two different classes of shares. You can have a preferred share that pays like a dividend before the common shareholders get their payout. So most shares are common shares trading on the exchanges, but you can buy preferred shares. So different types of ways to buy equities in companies and debt in companies. I definitely recommend I should do a video on this, and it's going to come up in my 30-day financial transformation course that I've mapped out. I have 2 videos, one on investment philosophy and one on the practicum and like the practical pieces of putting together an investment portfolio. Because I think even the most successful real estate investors need to have something beyond real estate in their net worth. So you gotta have some equities, some debt. The problem with bonds long term and debt long term and any sort of fixed interest debt instrument, is that you lose money over time. Like inflation is eating away at your growth. And if you look at the data, debt tends to underperform equities because equity people take the risk, right? If you own equities in a company, you're taking all of the risk. If the company goes bankrupt tomorrow, the debt holders get paid out first, right? They have a claim on assets before the equity holders do. So if you have debt security in this company, you're going to get paid out before any of the common shareholders, like preferred shareholders, then common shareholders. So the common shareholders take the most risk. As a result, in times of prosperity, when companies do very well, the common shareholders get rewarded exorbitantly well, whereas the debt holders are at a fixed rate. So they get 7% fixed, that's it. So if we have a hyperinflation time where, the inflation rate is 8% and you're stuck 7%, your bonds are worth nothing. You'll sell them at a discount just to get your money back. You won't even get your whole 100% back in the bond market because no one wants those bonds because they're paying such a low price. So bonds, if you look at historically, in the last 100 years of data, bonds have underperformed equities every single time. Like in every market, no matter what, bonds always underperform. They just do on average. So you want a portfolio. The ideal portfolio is actually like 91% equities and 9% debt, like bonds. So you want the portfolio is ideally 90-10. They say, like you hear rules like the age rule, like your portfolio should be, the percent you have in debt or bonds should be equivalent to your age. So like I'm 25, so I should have 75% equity, 25% bonds or debt instruments. That makes up my investment portfolio, right? That's right. And so if you're 75 years old, you should have 75% bonds and 25% equities. That rule tends to not fare very well. You'd be better off holding equities 9.9 times out of 10. That age-old rule is actually not, the data doesn't support that rule of thumb, so just throw that one out the window. If you've heard that one before, just ignore it. The 90-10 is your safe place to really build a portfolio. And if you're young and you're aggressive, you can go like 100% equities. The reason you go 90-10 is so that in times of deep recession, like we hit a 2008 point, you rebalance your portfolio and you sell your bonds off and you have a chance to buy in super low. So having the 90-10 just a bit more safe too, adds a bit more stability. The thing with equities is like they tend to outperform over the long term. Like here, I know this is a crappy graph, but like here's bonds performance, here are equities performances, right? And what happens is bonds are like a line like this, equities are like this. So the volatility, the variation between the prices over time is swinging like a wild seesaw. But on average, you will do better. So if you can hold for a period of like 5 or 10 years, you'll be okay. If you're forced to liquidate or sell, or you choose to liquidate or sell because you let your emotion take control, right? Like in 2008, The only time people lost, if they had diversified portfolios, anytime anyone ever lost money in a recession is because they sold. If you had a diversified portfolio and you owned a small percentage of the entire market, within 3 years, you were 100% recovered back to the baseline. No one lost money in 2008, 2009 if they owned a diversified collection of equities, right? If you owned like the S&P 500, the S&P 500 is going to be just fine. One company or two companies like Lehman Brothers and whatever are going to go down, right? Who cares, right? Or like a Nortel might in 2000, you might have one of those blips. But we're not owning like just no significant percentage of the portfolio was ever in one company. That's not diverse. That's not smart. Diversification is smart. It's a smart way to basically you're getting exposure to the returns that equities provide without taking the risk of one company going, one horse in the race. You'd rather have 1,000 horses in the race. And no matter what happens, if a couple horses die, it doesn't matter because 998 horses, they climbed at a crazy rate. So anyway, that's my tangent about diversification and a sample of what you're going to get in one of my videos on in the 30-day financial transformation, which again is going to be focused. Some people aren't going to like the fact that I focus too much on the frugality aspect, but that's sort of my niche. Like, I think, and I'm updating you guys with something I'm going to share with you guys. I'm going to be doing an article with, I think it's called Die Zeit. It's one of the biggest newspapers in Germany. I'm going to be doing an article with them. I'm really excited about that. Hopefully that happens. I meet with one of the journalists from there, and really excited about that because they have like a 500,000 follower, and they're going to brand me as the youngest. I technically am the youngest self-made early retiree in North America in the FIRE movement. So this article's on the FIRE movement, and they're going to be interviewing a bunch of cool people. But it's cool that if I get branded as the youngest, which I am, like Millennial on FIRE. You check out their website; they have amazing content. I love her blog. They're an awesome couple. They're from Toronto, and they talk about they didn't buy a house, they just rent hacked, and they invested in a stock portfolio. But I technically am the youngest to have done this. Like at 24 years of age, I am the youngest blogger, anyone on the social media today that has unlocked financial independence. So that's sort of got to be my niche. And the thing that made me different than most people is that through house hacking and a number of other cool avenues I used to get my expenses down, I was living for almost nothing because of house hacking and completely independent. So not relying on my parents to fund my education or anything like that. So it's one of those things where I think the thing that's so sexy about my story and so great about my story is that it's approachable to anyone. Like literally anyone can do what I did because I didn't come from wealth, right? I didn't have any of those head starts. I didn't have any of those big connections. I do think that like anyone can do it. Anyone can spend less. Anyone can get their spending way down and get a job making 50 grand a year, right? Or pick up a couple jobs that cumulatively add to 50 grand a year in income and then invest that difference. I think that pretty much anyone can do that. And people think you can't save your way to becoming a millionaire, but it's totally true. You can. It's like that it's a myth, right? That you can't save your way to wealth. In fact, like most of the people who are millionaires next door saved their way to wealth. And yes, they focused on return, but return isn't important in the beginning, right? The thing that's important in the beginning is, of course, if you're thinking about your entire journey to financial independence, the most important, like in the beginning, it's about spending less and earning more. That's it. Return on investment means nothing. If you invest in Bitcoin, you put $100 in Bitcoin, who cares? Like 1,000% on $10 is like nothing. 1,000% on $20,000 saved is so much, right? And every dollar, like if you think when you're 18 years old, if you guys are 18 years old, you're in high school, you're watching this, and you're going to spend like $50 on something, right? And on some item that's going to be worth nothing in 5 years. This $50, if you think about it, when you're 50, that $50 is like 500. So every dollar you save now is worth 10 later. So when I was saving, I remember about from like 18 to 22, I saved about 100 grand. Yeah, about 100 grand I saved through that time period and got through school debt free. That 100 grand, when I'm 35, is going to be worth like $1 million. And people think, oh, well, who cares? You can start saving when you're 25. Just enjoy your 20s. Just enjoy your teens. Just enjoy. And like even Gary Vee and guys like that say like it doesn't matter what you're earning now. But I'm here to say that like frugality matters and saving definitely does matter. And you can do it. Like anyone can do it. We all have the ability, the innate capability in us to do that, right? It's just living very, very frugally and investing everything that we're earning, right? And so the more you the more you can earn, right, then the greater the gap can be, and the greater the gap can be, the greater amount you have to invest. And every dollar you invest is worth 10 times when you go to retire, because time value of money is such that if you grow something at 7% or 8%, which is like super extremely conservative in my opinion, because with real estate you can get like 100% return on investment. So probably every dollar I was saving when I was 18 today has grown 5 times. So if you think about that, like that's insane. How impactful. I didn't realize when I was working at $18 an hour, having jobs when I was like 19 and 20 and 21, I didn't realize that I was literally saving every dollar of that. And later on, I invested that in real estate and grew it in real estate. And actually, I started in equities, publicly trading companies, like trading shares. And I didn't really get into options trading, but just buying and selling shares in companies. And it started there, but it eventually grew. And it's so impactful. Like every hour, you think about making $18 an hour. Well, really, I went and invested that, and that every $18 I earned, because I saved 100% of it. Like I wasn't spending when I was earning. If I was spending when I was earning, it'd be a moot point. There'd be no growth. But if you save what you earn, right, you earn that $18, and then you save it all, and then you invest it, the $18 is like $1,800, right, when you're like time for retirement. And that's the same reason why I'm an advocate of not going to university or college. I know I went to like the most expensive university and one of the most prestigious Ivy League education institutes in Canada, the Richard Ivey School of Business. But having been through that, I can tell you, having been through the Ivy League path, it's not worth the opportunity cost. So for that 4 years, I could have spent more time. I probably spent 40 hours a week on school and 30 hours a week working, but I could have spent 70 hours a week working through that 4 year period as an agent or doing something. And the opportunity cost of that time, not even, forget the tuition and the books cost, which is again, another like $70,000, but forget that. Just take my time and what I could have been doing, could have been making. And let's say I could have been making 50 grand a year for 4 years. Right, let's do the math now. It's $200,000, and now that would have grown at a rate of 7 or 8%. Or if I invested in real estate, would have grown at an even higher rate. And in fact, I'd have 4 years of experience in whatever job I chose at 18. So I'm actually graduating school with no experience versus graduating at the same time period in my life. If I had just worked, I'd be in a job with 4 years experience. And someone like myself who's a very hard worker, I likely would have been promoted in that job anyway. So I would have been further ahead having not gone to school. I know that's counterculture and counter, what everyone tells you, what your parents tell you, what my parents told me too. They're like, go to school, get a good education, do what we couldn't do, right? Go and get that Ivy League education because we couldn't have that, that sort of stuff, right? So I'm going off on a tangent here, but we'll get into, in the 30-day financial transformation course, I'll talk a little bit about that. I also have a plan to do a video on myself because you guys don't really know my backstory. A lot of you guys don't know my backstory, and I haven't done a good video on that. And I really do want to do a video on that about where I came from, because you guys don't know I came from nothing. Single mom who was making minimum wage. Like I made more than she did at like 17. When I was 16 years of age, I was working at Tim Hortons as the baker with tips and my performance bonus. I was working like 14-hour shifts with overtime. I was making way more than she was. So I didn't come from a lot. You guys don't know the story, and I'll save it because it's going to be a long-winded story. But my story is actually quite interesting and quite replicatable. I think that anyone could do what I did to get from where I was, which was nowhere and no one, to what I am today, which is a millionaire who's FIRE at 25, leading as one of the youngest guys leading the FIRE movement. And I like to think that I'm trying to promulgate the message that anyone can reach financial independence and retire early. And there's so many flavors of financial independence, right? From the guy who's doing the 10-hour work week, to the person who works 6 months, takes 6 months off and travels the world, to the person who just works really hard like I did and unlocks financial independence and never has to work another day in the rest of their life. But it's possible. Like this idea and this concept that you have to work your whole life in a job that you don't enjoy, and literally work to have things, to then have to work more to pay for those things until you get to this age of retirement and you die. That's a pill I can't swallow. And I think it's a pill most of us can't swallow, especially in the millennial and the Gen Z generations. We just don't want that. Our parents were happy with that, and our grandparents and our great-grandparents, they were happy with working their entire lives in one profession for one company, and that was it, right? And all they had was the weekends. We want to, as the millennial and the Gen Z, we want more. And because of technology, a lot of what technology has actually been one of the advancement of AI has actually sort of made this possible, right? Because before the, call it early 2000s, there wasn't such thing as DIY investing, and there wasn't a way to really invest cost efficiently with low management expense ratios, where you can really get that 7% consistently. And I think the internet has really allowed for this information sharing, right? And we know like people like, check out a book if you want to read a book, really great book. Vicki Robbins wrote a book, Your Money or Your Life, and I think it's the first book I was able to find dating back. It's the oldest book talking about financial independence and the concept of this FIRE movement, right? And I've been a big proponent of the FIRE movement. I'll just shoot this question out right quick, Jason. I like Questrade, big fan of Questrade. Interactive Brokers is also fantastic if you're doing high volume trades. I think it's $20 a month, but the first 20 trades are included in that price. And then after that, it's 99 cents a trade to buy and sell. The cool thing about Questrade is you're buying ETFs, it's free to buy ETFs. You only pay $5 when you sell, or $5 or $10 when you sell. So free to buy in. So if you were just to buy in like $100 or $1,000 at a time with every paycheck through Questrade into exchange traded funds, it'd be free. There'd be no buy-in cost if you do self-directed account. So very cool. Big fan of Questrade. I don't get paid to promote them, but they're who I use. Interactive Brokers, again, another great DIY do-it-yourself brokerage. Let's start in some of these questions up. And I'm sorry if this long-winded talk, I hope it was engaging. We've had like 23 people on, so I feel like people were engaged with what I was saying. In the comments, let me know if this is resonating. Like, is this something that you're getting value from? Is this something you're when you hear this, you're thinking, yeah, like this is you're speaking my jam. Like, I totally don't want to be in this siloed career where I'm really just climbing a ladder to then just jump off, right? Right on, Andre. Awesome. Thank you. So let's get up here. Let's hit some questions off, guys. Let's talk. Let's talk about live Q&A. Okay, so Michael Chung asks, can you tell us what you look for during a home inspection? Okay, so let's talk about a home inspection. Home inspection is when typically you have a checklist of things that you have to you have to look for in a house. Certain areas you're going to inspect in a house. So home inspection is like you're looking everywhere in the house for defects, effectively, things that need to be fixed, things that could be fixed, problems with things that were fixed if they weren't fixed properly, and sort of making a list of things you're going to need to do, should do, may have to do in 5 years, 10 years. You just build a list of things and get an overall condition of the house. So what is the condition of the house? I do it myself, and I have a 10-page checklist where I go through certain things I look for. More and more, I haven't been using the checklist. I've just been using the brain. But I started off, like literally I would crawl in the attic and go through my checklist and be like, looking at the beams, looking for damage of insects. Okay, no, I don't see any damage of that. Looking for damage of dry rot in the wood. Okay, I don't see anything like that. Looking for like the type of insulation that's in the attic. Oh, pull my tape measure out. How like deep is the attic insulation? I'd write that down. And then I'd like crawl on the attic. Okay, do I see any knob and tube wiring? No, it's all copper grounded wiring, or it's aluminum grounded wiring. And I'd write down what that was. And through experience, I just learned what to look for, from electrical to plumbing to, I could talk about, everything with that. I just started by Googling, actually. I went on Google and I just Googled like home inspection kit, home inspection list. And I ended up finding a bunch of free ones. And I just used it. I tried a bunch of different ones out. Some were 7 pages, some were 12, some were 10 pages. Some was like 4 pages. They were pretty brief. And it was amusing to see that certain home inspectors actually use these 4 and 5 page inspection reports. And having sold properties, I watched the buyers who were buying properties from me bring their home inspectors through, and I watched how crappy they were. And then I watched them pay them $600 and $500 for a home inspection. And I went, geez, like, I was expecting the home inspector to find all the problems that I knew existed in this home and then ask me to fix them, and they didn't. I was really surprised how poor the home inspectors have been that I've run into. A lot of them are retired electricians, so maybe they know really good electrical stuff. They don't know anything about anything else. Or they're plumbers, and now they do home inspections, and all they know really well is plumbing stuff. So anyway, I don't want to get down to the home inspection, because I can do a whole video on that. I think I actually did do a video at a high level on that at one point. I don't know if I released it or not, but I did sit down and film one talking about some of the things you need to look for when you're evaluating a house. But I go from top to bottom. I go attic all the way to basement, exterior, interior. I go in exterior, basement. I walk around the exterior, look at the main floor, look at the second floor, look at the roof. I do everything. I just look at everything on the house and I note everything that I see. So that's the key piece, right? It's just looking at all those things and finding a condition for a home. Nowadays, because I'm so connected and I've fixed pretty much anything, even a foundation can be fixed. A house can be lifted. You can fix the foundation. If you get a good enough deal, having to not build with the city in London here is, it's actually cheaper to fix a house that's falling apart than it is to build a new one. They say that's not true, but I've always found it is always cheaper to fix the house because you don't have to go through all the same permits and all the crap and the delays. It takes 6 to 8 months to build a house. I can fix a house in like 90 days with the right crew in there. And I've had to like dig down and put in weeping systems and waterproof leaking basements where it's like an inch of water in the basement. And I've had to fix floors that were wonky like this, right? We've had to lift up and add in, new support because the joists, at one point they put too much weight on the joists and the joist cracked. And so now you gotta slowly, over like a 60-day period, you gotta jack the house up slowly, right? With these metal beams in the basement. You put them on either side of the beam, you lift the house till it finally gets level again, and then you put a new beam under it, right? And you put a new lentil under a doorway, or sometimes it just doesn't, I don't know what it is, but every time it's different in each house. So these are things to look for when you're doing a home inspection. I guess in the beginning, if you're starting out, my recommendation has always been find 3 good contractors and bring all 3 contractors through. I used to pay them $20. I think I paid a guy $20 each, so $60. And one guy even, I just would get him like a beer, and he'd be like, just give me a beer, I'll come take a look at the house for you. So a lot of contractors, if you call them up on Craigslist or Kijiji, they'll come take a look at the house for free because they want the business, right? So they say, if you buy the house, use me. And so hopefully you're going to use them. But once you get good guys, use the same guys for every inspection. And then if I notice, if my contractor was like, oh, there's something here with this foundation, I'm not a foundation guy, I don't know, but it doesn't look good, then I would call my foundation guy and say, hey, can you come take a look at this property? I'll give you like $30 to come take a look. He'll come look at the foundation and tell me like, this is going to be $5,000. We're going to dig it down. It's fixable. Or he's going to say, no, like, don't buy this house, run away. And usually it's not that. Usually this is the price to fix it. And you just build that into your budget. And sometimes you don't get the house at all because the seller doesn't want to compromise, or some buyer from Toronto is an idiot and doesn't do a home inspection at all and just buys the house. And in which case, I never feel bad losing a bidding war. I know agents talk about, oh, you didn't get the house. Sorry, you didn't bid enough. I'm like, awesome. Man, I didn't get the house? Cool. Like, that's sweet. Let's go on to the next one. Because if I had gotten the house, I'd feel bad. It means I overpaid in a war against everyone else. So I don't like bidding wars. I stay away from them. The winner of the bidding war who gets the house loses. So you don't want to be the winner of the bidding war. I know agents make it feel like you want to be the one to win. I just saw this come out. Correction, my dream is to buy land. Shitty house on it. Yeah, no, maybe you just want to buy land. I mean, there's totally value plays in land. Like I said, I got my acre of land out towards Blue Point, Grand Bend area. It's fantastic. I'm going to build three new properties, but I got the existing house too. And yeah, I mean, just watch for your downside. At the end of the day, you got to buy smart. As long as you're buying smart, you can sell the land for what you bought it for or more. Then if you don't get the building permit from the city or don't get them the ability to develop, then at least you have an exit strategy. Whenever you go in to buy a property, always have an exit strategy. Every property I've always bought, I can always turn around and sell it for more money. I don't think I've ever bought a property. That's not true. I bought a piece of land. This is my worst deal. You guys are gonna hear my worst deal, 25 deals. I bought a piece of land that I wanted to build on in a student area, and I should have built on it. Like, I wish I would have built on it. I had approval from the city, but I was just tired. It was at that time last year where I was just tired of everything. So I sold the land off too. And I had this building lot, and I had the plans developed. I had the city on board. The lot was already serviced. I was good to go. I was going to build a beautiful 5-bed, 5-bath luxury student rental. It was going to be sweet, $700 a bedroom. It's going to cash flow like 1% rule, no problem. I thought I could have sold it for a great profit, but I was getting nervous. And things cooled down, I think last August, September, November. There was a cool period here in London. Same as what we're having. There's a bit of a cooling period right now, but there's a bit of a cooling period from the heat we'd had in the spring where things jumped 15%. There's a bit of a lull, and I happened to sell my properties then, which not smart, but whatever. You can't time the market. It's about time in the market, not timing the market. So ignore it. Don't try to predict everything. Just keep, moving along, deal after deal. Even if you make 20 grand instead of 25, who cares? At the grand scheme of things, if I'm gonna do hundreds of deals, it doesn't really matter. But this land, I'll tell you about this bad deal that I did. And it's a bit embarrassing. Like, usually I talk about like of the 25 deals I've done, like 24 of them are all really good. And this one's not as good. So I bought this land, this building lot, and I had everything done. Survey was all good. Everything was good to go. I was on my all-in cost on this land was $105,000 plus closing costs. So I was all in it for $107,200 was my all-in cost in this little lot. I was going to spend 250 grand and build it with my uncle, but he got really busy, so I didn't have anyone I could rely on to build with me. I had one builder quoted out, and I was nervous that they were going to be able to deliver, and I was stressed out and I was tired, and I just didn't want to go through all the stress. And I thought, worst case scenario, I'll make 25 grand. And I'm like, you know what, that's the worst case, but what if that happens? I don't want to just do all this work and build this huge house and go through all the stress for 25 grand. It's just, I mean, I know you guys might think 25 grand is a lot, but when you start to get to a point where your time is very valuable, and like I can go make $10,000 in a week like that. Like if I wanted to really just go hard and go 70 hours a week and not spend time with my family and just work like an iBanker, I could probably make 20 or 30,000 a week going hard with real estate. But that's not the goal, right? It's not all about money. It's also about freedom and lifestyle. And anyway, at that time, I thought my freedom and my mental sanity was more valuable than making 25 grand on this lot. So I sold a lot, and I finally got an offer on it, and it was an agent of a builder who ended up buying the lot, and I sold it for 113,000, and I held the property for 8 months, the land for 8 months before I decided to finally sell it, and I think I ended up making $1,500 or $2,000, but I had a mortgage on it, land mortgage on it, and land mortgages can only go 65% loan to value. I think I had paid it down a bit, so I had 60% loan to value. It was like yeah, what is it? I think I had like 50,000 in cash tied up in this property for 8 months. And so you guys know that I make my money work really hard for me, and my money should be doubling every year. Back then I was thinking, if my money hasn't doubled in a year, I've been failing pretty hard. So like my metric was always like, if 1 year later my money hadn't doubled, I wasn't working hard enough and I wasn't working smart enough. So I had to work smarter and find a better angle and a better way to make money in real estate. And if the angle I was using wasn't working anymore, I needed to change my angle and reevaluate. So if this model of buying houses and renovating them this way and flipping them this way or whatever and renting them that way wasn't working, I needed to change the model. And so I was looking at all my deals and I was doing so well in all these deals and my money is doubling in all my properties. And then this land was like, I was like, you know what, like this timeline to build another 1.5 years to build, no cash flow. I just sold the land off. And so my worst deal ever, if you look at time value of my $50,000, I lost money. Compared to what it could have been doing, opportunity cost, I lost money. And so that's the only deal I've ever lost money on. In real, I made $1,500 or something, like not a lot of money, like peanuts. But in what it could have been doing, if that money had been used to buy a property instead, and that mortgage had been used against a cash flowing property, I would have made like 10 times or 20 times or $1,000. I probably made 50 times that amount of money with my 50K. So just a really bad return, like made like 5% return for a 9-10 month period, which is not great. I can definitely do better. And let's discount that with the fact that I also own that property during a time when market appreciated 5%. So without that 5% appreciation, I would have lost probably like $3,000 on this land. So if the market had been completely flat, no appreciation, I would have lost money on this deal. So my worst deal would have been even worse if the market hadn't been so forgiving. And that's why I've done really, really well in real estate because the market has been so good for me, right? And in London, Ontario, it's been fantastic. So anyway, let's get some questions going here, guys, because I went on a long tangent and I really want to get to all these questions. Every single person who asks a question gets an answer. That's a promise. Okay, let's do some Q&A. People ask if I'm still sick. Yes, I am, but I'm getting better. Okay, can you describe what areas you invest in London and what are some areas you stay away from and why? And I think I addressed this a little bit earlier in a past video, but I'll talk about areas that are great in London and talk about the overall real estate market in London. There is no area now that I avoid. I will go anywhere in London that is a good deal. So there is always arbitrage in every market. So even in the D markets, though I don't like being in D and C markets, I will go in D and C markets if it's on like a quiet crescent in a D or C market and the property is, I believe, significantly undervalued. Like there's an arbitrage play in some way. Like there's a good amount of upside to protect me. I really don't like the A neighborhoods, like the A plus neighborhoods. I don't like them. The D and the C neighborhoods, I don't like them. I don't like when there's like guys shooting needles up and you just get a rougher tenant. Like when I show a tenant, I like to say like I would live in this property. It's a safe neighborhood. If I'm showing someone an area where they're shooting up needles next door, it's kind of hard. It's kind of hard to say like I'm going to put a family in here. Yes, Soho is a C neighborhood. I do not like Soho. It's my least favorite area in all of London. Robert Morris asks, hey Mike, just wondering, is Ireland a good place for real estate? Yeah, I don't know a lot about Ireland as far as real estate going there. I don't know. Honestly, I can't give you a professional opinion. Talk to a realtor there. There's probably an opportunity to invest in some parts of Ireland where you can make solid cash flow. So there is definitely somewhere you can invest in Ireland to make money. That's a guarantee. I don't know the market well enough to tell you where those deals are. Even in expensive markets, there are opportunities to make money. So there's opportunities to buy below market value, renovate and unlock that value, or just buy a turnkey property and put a good tenant in there, and then that'll create some value, or Airbnb it, or find a way to make a property work. Sorry, I just kicked my tripod. Yeah, so there's a way to make a property work in any area. Sorry, not any property can work, but there's a way to find properties that'll work in any market, whether that's LA, Vancouver, Toronto. I don't like to buy properties there because I think that like 99 out of 100 properties suck. Yeah, Ireland does. I don't know if you're an Ireland citizen though and buying Ireland real estate. I don't know. Buy where you live, I guess. If you live there, there must be a way you could house hack or something, the property that you live in, and find a way to make it work. Okay, let's go up and hit some more questions, guys. Let's keep hitting them. You guys keep throwing out the questions, and I will get the answers to your guys' questions. Let's go back up. Okay, did I close any deals this week? Yes, you guys heard about that earlier in the video. Check out what I closed on. Hey, Mike, what cap rates do you get? We talked about that question there. How do you apply for multiple mortgages and only take one hard inquiry? Michael Chung asked that question. So Michael, there is no easy way to apply for multiple mortgages and take one hit unless you go through a broker. A broker can get one credit check, I think, and then send that off to multiple different lenders. So you can use a broker who has like 20 different lenders in their list of people that they work with. So that's one way to do that. You could have 4 or 5 mortgages at one time, 4 or 5 applications at one time at 4 different lenders and not disclose that you're buying 4 properties at one time, close them all at the same time. Your credit bureau wouldn't be updated and you'd be good to go. So that's one thing you could do. Okay, let's keep going down here. And the next question. Check out his home inspection video. It's got good info. Yeah, good call. Check that out. That'd be cool. Okay. How do we get access to the mentorship? Awesome asks. So the mentorship, I haven't thought of a good way to structure this. Hopefully my phone isn't lagged too much. You guys experiencing a lag there? My phone just like had a glitch moment. Okay, so talking about how do you get involved in mentorship? There are tons of mentors out there, but my mentorship program I think you're talking about, which I haven't effectively built quite yet. But the idea would be that with this mentorship program, I would be partnering with people who actually buy properties. So if you want free mentorship, get on Wise Wealth Wednesdays. Let's have a conversation, one to many. Check out all my videos because that's a great place to start. And once you've been through all those videos, once you've followed what's on Bigger Pockets and places like that, that's when you can go and reach out and say, hey, I've bought a property, Mike, or I'm buying a property. Would you be that guy who gives me a kick in the ass? Or is that guy that talks to me weekly and gives me the motivation that I need, or comes and checks out a property here in London with me or whatever. And so I'm thinking of building a program where I only get paid on profit from the deal. So I help you find a good deal and I help you through that process. And as a result, I get a percentage of the profit on sale or profit on refinance or something like that. So I thought about building a mentorship program like that. I haven't fleshed it out, and there's only one of me, and I'm at capacity. Like I'm darn close to capacity. Every single day is busy. And so I don't know how many people I can take. It'll be a small amount of people I can take into the mentorship program. Maybe there's someone I can partner with who wants to help with coaching and stuff like that. There's an opportunity. I'll throw that out there. Someone who's really good with, who's been doing this a long time. I have to vet them, make sure that they're, obviously qualified enough to help coach people. But yeah, I wish there was more of me. This is the best way I can give you thousands of hours of free mentorship and coaching is through Wise Wealth Wednesdays and through my videos and stuff like that, and through courses I can create. So it's in the plan. I do want to do it. Right now I'm doing a very limited number of people who I'm mentoring with, and mostly they're real estate investors, and they're providing the financing on the deal, and I'm providing the expertise of how to find a good deal and how to manage that deal effectively, place good tenants. So all of that coaching that someone needs. And even if you know it all, even having someone there to tell you, what you're doing is you're going down the right path, or have you thought about doing this? Even though you know both answers, just talking that through with someone can be very, very valuable, and just a very cathartic experience, but also just very valuable. Even for myself, I find it valuable I have a lot of friends in my network that I use as coaches, and I bounce ideas off of, and that's extremely valuable. I think we all need those as real estate investors. We need those performance coaches in our life. And if I was not FI right now and didn't value my freedom, I'd be on the phone morning to night with you guys, coaching you guys through it. But unfortunately, I only have so many hours in the day, and I don't enjoy coaching all day long. So it would have to be I'm trying to make it so hard that only a few people, only the best candidates that are actually buying properties are working with me. So if you're working with a deal and share the profit, happy to coach you through that like it's my own deal, effectively. But it'd be your deal. Jason, strangely, I just saw your question come up. It's saying you had 20 tabs open, looping my videos. The key is make sure you're on private browsing mode, I think, because you can only have I think each IP address can only do so many watch time minutes. But I'm only up 150 since last week. I'm up 150 hours of watch time, which is average. I haven't noticed a huge jump in the watch time, but I'm getting there. I think we're 400-ish hours away now, a little bit less than 400 hours away to monetization. So if all 20 of you that are on right now each watch 20 hours of my videos, we are at 400. There it is, guys. 20 of you. If you're catching the replay, put me on go on private browsing mode or whatever, and run some of these videos, because that'd be cool. Once I'm monetized, then I can do get my videos promoted, right? Right now, YouTube has no incentive to promote my videos because YouTube makes no money from my videos. So yeah, that'll be cool once I'm monetized. If everyone spends 20 hours, all 20 of you guys, and the 50 of you guys that check it out on replay, or the 150 that check it out on replay, if you guys all watch a few hours, if everyone watches 5 hours of my videos, put on 4 Wise Wealth Wednesdays in a row on, you'd be good to go to get me to monetization. And I don't know how that works. I wonder if you need to have multiple IP addresses going. I guess you guys are just subscribers, so you could watch as long as you're logged into your account, and it would be okay. You don't have to be an incognito, but I think only one per IP address or something. So one video at a time per person logged in counts towards the watch time. I don't know whether or not you have to keep clicking it for it to count. I have no idea. I should Google that and find out. But let's keep getting these questions knocked out of the way, because I want to get through them all. And by the way, curious if the microphone is coming in loud and clear with the new lapel mic and the new camera for Wise Wealth Wednesdays. I bought this new phone. It's very hot because I've been on it all day. I can feel the heat radiating from my screen of my phone. So it might be a little laggy, but bought this new phone for you guys, and I'm looking at a new lens and a new camera for you guys, super high end. I'm hoping to do that. If I get monetized, then I'm probably gonna throw some of my profit from the real estate deals into buying a really cool camera. So that's cool. Hopefully better quality than last time. Let's go up here and hit some more questions. I'm gonna scroll up and let's see. Going up. We hit this question, we hit that question. Mr. Beefy 971, how you doing? I see you're on. African says, what sounds more exotic to you? Moroccan or South African? I think Moroccan. Moroccan has a bit more of a, kind of chillin' vibe, I think. These selfie home walkthroughs are the best. Jonas, thanks, man. I will upload for you guys tomorrow the video I took. It's not going to be great. It's just going to be honestly me just doing a selfie walkthrough with my phone, because I forgot to bring my good camera, one of my good cameras. I forgot to bring them on site, and yeah, so you're going to get an update on that. That'd be cool. The light is a bit tad dim. Why don't we try an overhead light? Hey Cal, do you want to toss on the overhead light? Let's see if that makes any difference here with the lighting. I know we're gonna go from bright white light to then a bit of yellow light. Does that help at all? We got now the overhead light on too. I don't know if that's, let me know if that's a bit better. We do have the lighting kit boxes going and stuff. Okay, let's hit some more questions, guys. Tommy asks, can you list a few key things that bring the most value out of a renovation? So it depends. is the answer I'm going to stick by. But to just name off a few things at a high level, one, definitely kitchens and baths. Kitchens and baths are great places to spend money. Most people buy emotionally based on the heart of the home. So open concept kitchens do really, really well. Spending a little bit of money in the bathroom. So like $130 on a slow close dual flush toilet. Great investment of $130. Tiling or a nice backsplash and a nice $15 on a nice shower wand with the rain shower head. That it makes that washer people walk in. Ooh, look how nice that rain shower head is, right? $150 on a vanity, again, nice. And floors are cheap. Go high-end travertine tiles, and you got a bathroom's like 30 or 40 square feet. Who cares if you spend $3, $4, $5 a square foot on tile? It's gonna look really, really awesome. Hey, some guy, how you doing? It's gonna look really good. That's a really great place to spend money, is in the bathroom on the tile floors. Floors in bathrooms are super cheap to do. You can buy the flooring for like under $100 for most bathrooms, because there's such a small amount of square footage. You can go super luxury. Then people go in the bathroom and like, wow, look at that like heated floor, those travertine tiles, and it's like that cost me like $300. If I was doing the whole house, it'd be really, really expensive. But that's a great way to kind of really maximize that dollars spent. The best place I like to really spend money, and I'll get to this. I've talked about this before. The first property I bought. We'll talk about it. It's not a great deal, but I'll talk about it. And it was an okay deal. I house hacked it, so it worked out okay. Where else can you spend money? I find adding square footage is huge. So if you have an unfinished basement that you can finish with good ceiling height, tons of value there, finishing that space. Specifically though, finish the space to add bedrooms. Adding bedrooms to a home and adding bathrooms to a home adds a ton of value. So usually, so if it already has like 5 bedrooms and 3 baths, adding a bathroom or bedroom doesn't matter. But if you have a 3-bedroom, 2-story house with 1 bath, 3-bed, 1 bath, very, very common. A 4-bed, 2-bath, way more valuable, like $5,000 to add a second bath, and you know, I don't know, like $3,000 to add another bedroom or whatever, and better utilize the square footage of the footprint has a ton of value. Ceilings, like high ceilings, if you have a drop ceiling that's lowered, like I have a lot of properties that they have like 10-foot ceilings, but they put these drop ceilings in to drop them down to 8 foot. I knock that all out and I make it nice and bring in the 10-foot ceiling again, because you know, houses are efficient to heat now. They weren't then, so that's why they lowered ceilings. So that's another way to get a big bang for your buck. I find the ambience wow factor. Places not to spend money. People really spend too much on their kitchens, I think. You can get away with like decent, okay cabinets from Rona or Lowe's or that sort of thing. And people overspend on their countertops. I get a cheap countertop. It's a quartz, but I go thin on the quartz. Something that looks really nice and flashy. I don't overspend there. I go use stainless appliances. Even though they have the wow factor, they look really good. I honestly believe in not overspending on appliances. People overspend there. People overspend on like front balconies. They overspend on landscaping sometimes. I've seen people overspend on fancy windows, fancy doors. It's situational, but a lot of times people overspend in areas that don't matter. They'll spend money on things that don't add any value to the property. And so those are things like things people can't see sometimes don't add a lot of value. They're just sort of a waste of money. Sometimes you have to do it. You have to waterproof a basement. It doesn't add any resale value really, but it has to be done to finish the space. So that's an example. Okay, Darius, that's a great question. I saw the first bit of that question pop up, but give me a minute. I'm gonna get to it because we're gonna have a long chat about that in a minute. Okay, going back up, trying to catch up on these questions. Mark Neff asks, Mike, you're awesome. I'll meet you someday. Sounds good, Mark. Looking forward to that. Jason says, sup, Mike. Skipping supper. That's awesome. We read that comment already. We did Tommy's question. What are your thoughts on investing in a very small town? Prices are cheap there. ROI is pretty good too. You guys have heard me talk a little bit about small town versus big town investing. We know that as societies advance, what we find is that cities get bigger and bigger and rural towns disappear. So as countries become more developed and nations become more developed, the small towns, eventually they're too small to sustain the infrastructure. So then all the water pipes need to be replaced and sewers get screwed up. Then they can't levy enough from the property tax bills of these small towns that the cities eventually just become ghost towns. There's a lot of them in Northern Ontario. In Canada, there's a lot of small towns that just disappeared. If you look at the map over the last 100 years, a lot of small towns have just disappeared. So not in a hot real estate market, but in a cool real estate market, people tend to move to the major cities because there's jobs there. You know, people want to be around other people. I'm a big fan of like bigger cities, not necessarily like Vancouver or Toronto, but a city like London, I don't think it would ever go anywhere. Like we'd be okay. But a small city like Chatham or, like Woodstock, even Woodstock's pretty big, but there's some small towns, outlier, way outlier, that may eventually kind of dry up, right? And so that's the downside of investing in small towns. But the upside is demand is not as crazy because there's not a lot of foreign buyers, or there's no foreign buyers, I'm sure, almost none in those markets. Whereas in markets like London, we have Chinese investors and Russian investors and people from Brazil coming, from international investors buying, because London is one of the top 10 cities in Canada. So and based on income per capita, I think we're in the top 5. People here tend to be very wealthy, and cost of living is super low. So cost of living to income, London does very well. We're in the top 5 cities to live from a cost of living perspective, which is why London is going to be the FIRE mecca. I think there's going to be a lot of people here following the FIRE movement, financial independence, retiring early, London on fire. That's why we started the group. We're planting the flag here. I think London is going to be a big major hub, and we're going to start a conference here, I think, to draw people in to London in Canada as a place for FIRE. But anyway, let's keep going with the questions. I got a lot to get through here, so let's do it. Okay, going up, bought a new flip that's going to be targeted for an investor to buy as a legal conforming duplex, Don Lewis says. Very cool. So that's what you've been up to. Cool. Tell me more about that. I'd love to hear about it in the comments after. Let's have a chat after this video. Throw it in the comments. Let's talk about that, or while I'm in this video. People say I sound sick. Thanks, Jason. I don't take that as a compliment, but yeah, I guess I am sick. My sinuses are still a little plugged. My throat's still a little sore, but I did do a lot of cycling today, and exercise is very good for the body. Very good to kind of purge the sickness. Really good for the immune system, I think. So hopefully I'll get better soon. By next week for sure. I'm just too stressed out, guys. Taking on too many projects, and that's why I got sick. Not sleeping enough. Get too excited about things, and I just go crazy on stuff. So, okay, we talked about small towns. Already fully rented. 10 minutes away to bigger towns. 20 minutes away to even bigger towns. Yeah, I think you're probably okay as long as you're in close proximity. Those towns would likely grow and absorb the small towns, so you'd probably be okay. BR Bo says, hey, how you doing? And Jared says, hey, I've been networking like crazy. How do I get someone to mentor me? I'm trying to get a guy who's an SEO expert to mentor me. Any tips on how to approach and maintain the relationship? Check out my video on mentorship. I did a video a while back, one of my first few videos on mentorship. And I talked about ways to get a mentor to, basically for a mentor to want to take you on. One of the key things is, okay, see you, Jason. Check out a Superstore. They'll bring the groceries to your car and you can price match. For $3, they'll load your car up. Pro tip, the Real Canadian Superstore. I'm now doing it to save myself an hour's time. They bring the groceries to your car, you pull up and you price match and pay like Wi-Fi in your car. Very cool if you want to save time. Okay, they probably don't have that at the Chinese supermarket, but you probably get some pretty good deals there too. So anyway, let's keep talking. What was I talking about? Do you remember the question I was talking about?
Reaching out mentorship.
Yes, mentorship.
Tell them what I did.
Yeah, so perfect example. Kyle's here with me. He's been helping me every Wednesday, pretty much every Wednesday. Missed only one, I think, the last 4 or 5. He's been here just hanging out. A great way to really do mentorship well, I think, is my idea is always like the compliment sandwich. So starting with like why you think they're great, what you love about the person you're trying to follow. So if you think he's an SEO expert, compliment him on the fact that you've been following him for a while. Show that you've done your research, right? Give them an educated, flattering type of response, because a lot of people are going to message them, but you want to stand out in some way. And then the way you do that is then you say something that they're maybe not as good at, but do it in a way that says like, I want to help you with that. Like, this is what I want to help you with. And bring value, right? Exactly what I told Kyle is if you can bring value to a mentor's life, they're happy to give value. If someone comes and brings me value, I now feel obligated to pay them back. That's just who I am. So now I feel like I owe them value in some way. And so I will literally find a way to bring value to their life so that I can feel like we're balanced. So when someone does something good for me, I believe in good karma, I'll do it back. And so that's one way to get mentorship, is to reach out and add value in some way. Maybe going and following him around might be valuable for him. It might not be. It might actually be a waste of his time. He might want you to follow him around, but maybe you could do something for him. Say, is there anything out there that I could do for you that would help you out? Maybe it's just stroking his ego. Some of these guys, they just do it because they love the ego stroke, and everyone loves when someone tells them they're great. So tell this guy he's great and flatter him, right? Continually. And eventually he's going to remember you as the guy who flatters him all the time. And when you eventually go and offer to take him out to lunch, he's going to probably accept that free lunch because everyone has to eat. And then that might be your gateway in, right? So that's my advice to you, Jared. And check out the other video where I talked about mentorship and some of the key pieces and how do you find a mentorship opportunity. You can definitely do it in a relatively affordable way through providing value and creating value for the person. Sorry about that, guys. Just kicked my camera. Okay, let's go up here. Keep hitting these questions. I'm surprised we still have all these people on 70 minutes later. Good for you guys for sticking through. The local following, or the real deal following, guys. We talked about these questions here, talked about that question there. Wow, some great feedback there, awesome. Would you sub-meter your units so you wouldn't have to pay for utilities? Mr. Beefy971 asks. I haven't actually had a need to ever do that. In cases where I wanted the tenant to pay the utilities, where some properties like student rentals, students don't want to pay utilities, they don't want it in their name, they don't want the stress. So the utilities have to stay in my name anyway. And so what I do is you can set up a way to measure it, but you could just say like the house is 60-40 in size, so let's just divide the utilities 60-40 and they agree to pay 40% of the water, 40% of the hydro, and you just build them accordingly. And if things get crazy on one bill, you try to track who it was, but you just bill it back. So that's one way. Alan Lawrence asks, what's your thoughts on wholesaling real estate in Ontario or GTA and surrounding areas starting in real estate? Wholesaling is fantastic. It takes a lot of time and energy and skill to do effectively. So it's a great place to start if you don't have any capital.
Hey, Daddy.
Oh, hi, Emma. We are live streaming, Emma. How you doing? Did you have fun at the park? This is like that viral video on Facebook where the kid's walking behind and he's on live TV and then the nanny runs in and grabs the kid. We just had a live moment like that and you 15 guys all witnessed that. Can we not shake my camera? All right, I think we need to have her removed at least because I can't concentrate on these questions. I love you, Emma, but yeah. A good way to explain diversification as well as by using the elevator example. I'm not sure what you're talking about there. I picture a graphic that I watched a long time ago, but feel free to elaborate on that. I'll have to refresh. Wow, I need to learn more. I was thinking about writing a children's picture book, Jared says. Make it free and sell it for $5. I'm confused. You're making it free and selling it for $5. I've always thought, when I released a course that I would just make it free and that people who got value from it would literally send me money. And so I wouldn't charge anything. And so if someone was actually destitute and poor and needed this book, it's free, take it. But, if... Emma, how you doing? We're live right now, okay? No, I'm not gonna tickle you. Okay, I'm gonna tickle you for a little bit. There, okay, I tickled you. All right, Mama, can you grab her, please?
Come on.
I can't tickle you when I'm on a live stream, I'm sorry. I gotta through all these questions. Are you all wet? Okay, so, yeah, I've always had this idea that, yeah, I'll see you in a minute, baby girl. I'll do bath time in a minute, okay? We're gonna wrap it up soon. It's my daughter's bath time. And she has come in and made her live stream appearance. You guys didn't see, but she walked literally under the camera and I tickled her. Okay, so one string holding the elevator and pulling it up is dangerous. Having 1,000 strings is more effective because if a couple strings break, you still have 900 plus strings to pull up the elevator. That's exactly right. Dylan's got a good point on the example of, it's the same thing as the many streams flowing into your lake. If you have one river and the river ever gets clogged or blocked or can't drain that source of water is done, your river will, or your lake will soon dry up. Same thing, you want 10,000 streams of cash flow and income coming in as opposed to one big one. You want many small ones. Ideally, you want many bigger tributaries growing into one big lake to keep you keep your boat afloat, as they say. But yeah, that was another analogy that I remember. The big thing to keep in mind when we're talking about diversification is making sure there are a couple ways to diversify. One way is mutual funds. I'm not a huge fan of mutual funds, mostly because the management expense ratio, like the management fees associated with these, like 2%, no matter what, whether the portfolio is up or down, they're taking like 2%. I don't think almost no financial planners can add that much value on a portfolio that's like, say, $1 million. Can they add $20,000 or $30,000 in value? Probably not. Better to pay a fee-based, advisor and get your stuff, your fees knocked down. You can diversify with ETFs, just pay an advisor a fee. The other option is going to private high wealth divisions, and they'll do like 0.75, 0.5% MER, so 1/4 of the price of the street value mutual funds. So anyway, just on a tangent. Not going to get down that bridge because I don't want to go down that bridge right now in this video. Let's just stop at the bridge, back up, and take another path. Okay, so Jonas says, Mike, do you think the world is heading towards a currency war? I will not comment. I think Trump is a loose cannon. He's a very smart, or he was a very smart businessman, a really shrewd business investor. He killed it in real estate and did a lot of cool development plays in the 70s and 80s. I was always a fan of The Art of the Deal and some of his other good books. Some of the stuff he says, like, geez, I mean, I can't get behind that. As a person, I don't think I like him at all. He's done some really good business stuff, talking about currency wars and trade wars. He is very much a nationalist, which I'm not an American citizen, so that doesn't benefit me in the least. And in fact, most of the nationalist policies he's coming out with are not going to be good long-term for the United States. And they're not going to be good short-term for Canada really either. I don't know, we'll see how things play out. I'm not going to speculate one way or the other. Would you invest in precious metals, example, gold or silver? Jamal asks. So Jamal, Raja, would I invest in precious metals? Yes. I would have a very small percentage of my permanent portfolio in precious metals, as well as commodities and other asset classes, right? Because there's different asset allocations you want to maintain in your portfolio. I think gold should be a very small percentage, the same way I think cryptocurrency should be a very small percentage. The reason I don't like cryptocurrency that much, and I don't really like gold and silver that much as a large percentage of your portfolio, like I'm talking more than 5% of your portfolio, because people are buying everything in crypto and gold and silver. It is supposed to be a hedge and a store for value. So gold and silver traditionally are good hedges and stores of value, and they have been for millennial, right? Thousands of years. Since the beginning of time, we've talked about gold and silver. And so I don't think it's going anywhere in the sense that it's always been there. I think it's a good store of value, but here's the problem. It is only worth what someone is willing to give you value for it. And so it does not generate any cash flow. It is not a business. It doesn't have any way to pay you back other than selling that to someone else for more than what you bought it for. It's a decent way to store your wealth. In fact, the government can't track if you have gold bars in your house. They can't tax that, right? They can't control that value, that store of value. So I think that's why some people value gold still to this day. I do think that I wouldn't have a large percentage of my portfolio in it because it doesn't cash flow. And I like to recoup my main investment through several different vehicles, one of which is most certainly cash flow. So I like to get all of my investment back in, like, say, a 6 or 7 year time period from cash flow. Our backlight turned off, but it actually made me a lot brighter, so that's kind of cool. For some reason, it actually helped things. I guess when I lean forward, it doesn't, but hopefully the lighting just got a little bit better. Cool. Or my phone just did some weird adjustment, but looking kind of cool. We're talking again about gold and silver and cryptocurrency. Small percentage of your portfolio, doesn't cash flow, doesn't provide a way to, you can't be fired with a portfolio of gold, silver, and cryptocurrency because it produces no cash flow. You have to really just sell it off, sell portions of the principal off. And I don't like to ever sell the principal. Big fan of just the interest. I like to just spend the interest, not the principal. So with gold and silver, you got to sell portions of that off each year. and it's a lot of volatility with cryptocurrency and gold and silver, and there's no stable cash flow. At least if equities are moving like this, you get dividends that are consistent and stable every single quarter. They're releasing a say 4% yield every single year. Bank stocks like 5, some of them 6%. Utility companies 8 and 9% yields annual. You get 8 or 9% every year, regardless of the share price. You get your money back in like 6 years. And so I like that. That's consistent and stable. I like multiple ways to make money. Same thing in real estate investing. The reason I'm not a big developer and I don't focus a lot on land development and plays like that don't cash flow is because I like businesses that self-sustain, that provide cash flow. I get my down payment back in 3-4 years, irregardless of appreciation. I don't like to rely on appreciation. It just isn't a great way to invest. I like multiple streams and multiple ways to win, multiple ins to kind of building wealth. So that's my thought on cryptocurrency and gold without doing like a deep dive or sharing too much on my thoughts on that. So, okay. Mr. Beefy asks, or use window examples. One big pane of glass is broken, your portfolio is down, or if you have 4 separate windows, that makes sure the same area of the window, it's much easier to fix. Okay, yeah, so again, talking about diversity. Good point. Yeah, exactly right. Jonathan asks, could you tell us, how did you save up 100K in such a short time? This is when I was talking about some of my backstory, and we'll talk about that in greater depth, but the secret has been frugality. I work really, really hard. So I've always had good part-time jobs. I've always had some sort of hustle. So whether that's I'm tutoring, or that's I'm cutting lawns, or I'm starting some business doing something, or I was working at Tim Hortons for 2 years. I was working as a teller at a credit union. I've worked in the government as a border service crossing person. I've worked at KPMG in accounting. I've worked in Infotech for, again, 3 years. Just so many different jobs, always trying new things, starting businesses. Some of my businesses failed that I started. I had a hood cleaning business for restaurants called Nighthawk. It was a cool business, but didn't really kind of sold it as a break even. But I just tried different things. I was just always working. And so when you're always working and creating value and throwing value out there, value comes back to you. But the thing is, a lot of people spend that. Like a lot of people going out to the club and dropping fat bills and et cetera, whatever. I was just saving everything. I was house hacking. So I had a bunch of roommates in the house that I lived in. And before that, I rented a room for $290 a month, all inclusive. So I was living super frugally. The one guy there I shared food with, we went to the grocery store together. So I was living like $60 a month on food, eating well, but just splitting that budget. And then when my girlfriend, now wife, Elise, when we moved in together, we kind of shared a $590 apartment each. So it was like, again, $280 something each. Then we bought a house with everything we saved up, and we used that to kind of keep our living costs down because we lived in the master bedroom, rented out. I renovated it and added bedrooms and added an apartment in the basement and rented the whole thing out, all the bedrooms. And so we were bringing in enough that our entire mortgage was paid for, utilities, our car was paid for, and our food was paid for by the house. So all of our basic necessities were paid for through this house hacking situation. So every dollar she and I both earned went right into saving. And I made a lot more than she did. So I just invested all of every dollar that I earned, and I was always working. There was never a point I can think of ever since I've been 16, 15, that I wasn't working. There's never a point where more than a week I didn't have a job or a hustle going on. So even if I didn't have a job for a period of like 6 weeks between jobs, I would just find something to do to make money. Just how I am. I just gravitate towards that. So that's how I was able to save 100 grand, and then how I was able to save 250 grand and save 500 grand. And then I invested that really well, and now I'm a millionaire because I've invested that base of money. But even if I hadn't invested well, I think that I'd still have that huge amount of capital today because of saving. So frugality being one of the key success factors to being FIRE. Ton of great real estate books out there. Check out biggerpockets.com as an option. Another thing to check out too, like Trump has some good books on the art of the deal. Rich Dad Poor Dad, some good stuff there. I read a lot of blogs, and I didn't honestly read a lot of books, but I've read a few. I just can't think of any at the moment on real estate. Saw that question pop up, so thought I would hit it. Well, I saw it. Okay, let's keep going here. Let's get through some of these questions. I really got to hurry up, guys. I got to do the whole bedtime time. I doubt Gary Vee was not giving the impression that you shouldn't save, but he also preaches practical advice. Yeah, Alan, you got a good point. I did hear some of his advice around like giving your time away for free for the first 5 years of your career, not focusing on earning a lot of money. And it doesn't sound like Gary was focused on saving, but more about entrepreneurship around. I'm a big fan of like, if you're going to become an entrepreneur, work a full-time job and be the entrepreneur. Like, there's no excuse for you not to work 50 hours a week and do that, right? If you want to get into real estate, go get a job working 40 hours a week and do real estate, because then you can save your whole day job income if the real estate stuff takes a while to pick up. So that's why I'm just a big proponent of working really hard and saving. If you work really hard at something, you will be successful, even if you don't work smart enough. The hardness, just eventually you grind out whatever you want to do. It's not easy, it's not fun, but it'll get you there. There are also a million paths to fire, so you don't have to just take this one path. There are 1,000 other paths to fire that all work, and some take a little longer than others, but they're all viable options. And Gary's man, I love a lot of the content Gary puts out there, so I just love a lot of the stuff that he puts out there, so I'm a big fan. Grant Cardone actually talks about this quite a bit. He says that you can better educate yourself if you create your own experience. Yep, big fan of what I have heard Uncle G say that. Grant Cardone. Jared says, sign me up, 100%. You're already signed up. It'll be coming, the content will be coming out here. Jason says, what brokerage is? We talked about that earlier in the video. Check that out before. Andre says, very much so, awesome. Jared says, I'll have to replay this. Yes, go ahead and replay this a lot of times until we get the monetization. We're getting close. Tiger Pro says, golden value. Man, amazing. BJ Scott. Is that the same BJ Scott that I know in IRL? Might be. Thank you for the clap. Okay. Can you send us the 10-page inspection list? Yeah, I could probably dig up an inspection list on my computer and put it out in a video. I'll release a video on the home inspection specifically, and I'll go through a checklist, and I'll put the like a checklist out there on my website. So I might have to modify it a bit because I cribbed it from somewhere else. So I don't want to get in trouble with copyright. I guess it's just general stuff that you look for in a house anyway. So how much intellectual property could that be? Okay, Andre says, any tips for applying to the city for renovation permits? Quick and easy. I had to get engineering drawing to add a separate entrance to a property. Now to apply to the city for a permit. I hate working with the city 9 out of 10 times. 1 out of 10 times, you get a great person at the desk. They're awesome, super helpful, and you get referred to the right people and you get stuff done. The problem is it's minimum 10 days to get a permit. It just takes 10 business days to get stuff, just to get the application approved. Forget the inspections, everything else. It adds months to your timeline. Unfortunately, it's just the way that it is in my area in London. I don't know about other municipalities. I hear the same thing about other municipalities. Tips, bring coffee and donuts and always be super cheery. Please make sure you're always friendly with the people you're dealing with. They just have a job and they're just doing their job. Anyway, guys, oh, I saw some messages come up. Mr. Beefy says 1% battery. See you, Mr. Beefy. Catch the replay. I'll see you in the comments later. Some guy says, thanks for the video. Great as always. Have a great night. See you later. Catch the replay if you missed any of this, because I probably got another 5-10 minutes to blitz this out. Okay, so let's go back up, hit some more of these real quick. I got a lot of questions to go through. Oh my goodness. We're going to do like a lightning round, like Jim Cramer does on his Mad Money show. Okay, my dream is to buy raw land. Cool, yes. Raw land is okay. Be careful, there's no cash flow with raw land, so you can get into a hole. Developers need deep pockets in order to get projects through to fruition. They often don't have financing, and that's why most of them fail. That's why I like to buy properties that cash flow, and I like to buy multifamily properties that I can renovate while I have 2 other units rented. I'm talking at hyperspeed to go faster. Let's try to get through all of these questions as fast as possible. He said, correction, buy land with a shitty house on it. As long as you can rent the house out and find a way to cash flow the house while you're trying to make the development play happen. So my land cottage, I have Airbnb running on that that's covering all of the expenses while I'm working on the development play to sever the 4 lots off. That does cover all of the expenses. So you might have to listen to this on like 0.75 times speed because I'm gonna go super fast, guys. Do you ever meet directly with the seller or does it have to go through the agents? I've met directly with sales that I've bought. If you want to get directly to the seller through 2 agents, if you're buying on the MLS, on the multi-listing service, you have to write a cover letter. I recommend the cover letter. It's fantastic. You can put in the cover letter intricate details about yourself, of why they should sell to you. And if you have 2 offers that are the exact same price or very similar conditions, you can win because your cover letter gets to the seller. The agent has to present the cover letter to the seller. Seller reads that, says, oh, this buyer, you know, he loves the house and he's got a family and whatever. I'll sell to him. I'd rather sell to him because of this cover letter, whatever. So that's one quick strategy. We're gonna keep going fast. I gotta go faster. Okay. Would you finance a deal if the numbers made sense in your mentorship? Maybe, if the numbers really made sense, Alan. Just because I have a lineup of people who have the money, why would I use my own when there's a plethora of people willing to put their own money up. Okay, Jason asks, Mike, are you close to monetizing your videos? I had 20 tabs open. Yes, we talked about this. I'm very close, guys. Please get me the extra 400 hours that I need. If 20 people all watch 20 hours of my stuff, then we will be good to go. Very expensive. New York is literally known for real estate, known for expensive real estate. Helen, the most expensive real estate. It's hard to cash flow it, but you can still make it work. There are guys who do it. What was the first property you ever purchased? We need to do a whole video on this. I have it planned, talk about my first video or the first property that I ever bought. It was a property that was a 2-bedroom, 1-bath. I converted it into a 4-bedroom with a basement apartment and 3-bath, 2.5 bath, with ensuite in one of the bedrooms. So definitely was a huge value play, and it was more of a house tax situation because I bought it for $208 and sold it for $230 after commissions. So I made like 20 grand over a 3-year period that I lived in the property from when I was 19 to when I was 22. So not a great deal, not one of the best deals. Market was relatively flat back then. Didn't make a lot of the appreciation, but it allowed me to live for free because I house hacked. So I was able to save my salary for those 3 years. I saved like 150 grand because I had all these tuition credits. I paid no tax on the money that I earned because of all the education credits that I had saved up. So those 3 years I worked, I literally had no tax. Every dollar I earned, I saved 100% of my salary. So after tax was equal to, in fact, I got rebates back beyond what I paid because of some of the, well, it's almost impossible to get rebates beyond what you paid, but anyway, let's keep going. Okay, any tips? We did that one. I answered that question. Never met directly with the sellers. We talked about that. The cover letter. Show me how to make that much, and I'll buy a ticket down and work for you. Serious. Tiger Pro, we should have a conversation. Green Sequoia, double every year. That's insane. Yes, it is not always replicatable, and as you build your wealth up to multi-millions, it's hard to keep doubling. But when you have less than $1 million, it's a lot easier to focus on a few good projects and just slam them out of the park. Jonas, we talked about Soho being a C neighborhood. Yes. Robert Morris, he says, hey Mike, just wondering, is Ireland? We talked about that one. We talked about Ireland. Go back in the video, check that out. My internet is janky. I hope there's a replay of this. There's always a replay, Jared Aiken. You know that. Check it out. Catch the replay. Watch it a couple times if you need to. I know I talk quickly, and I apologize for that ahead of time. Sorry, not sorry. How about Ham and Eggs? Ham and Eggs is Hamilton and Egerton area in London. Again, rough area. There are still deals to be had in the area, and it has been improving in some of the subdivisions around that area. Ham and Eggs itself, not great. I think Trump is a Jesus. Trump equals Jesus. Isaac Clarke. Yeah. Okay. I mean, The Art of the Deal was a good book. The guy was killing it in the 70s, 80s. He's a cocky son of a bitch, but he knows how to get deals done. He knows how to manipulate counselors, and he's a fantastic developer, and he's a great brander. The guy can brand like you wouldn't believe. He's got a multi-billion-dollar brand, so that you can say what you want about Trump because he is a womanizer and, you know, sexist, whatever. He says a lot of crazy things, but he does know how to build a brand and a business. So power to him. Okay. We're over that question. What was the first property? We talked about that. What are your thoughts on York region for real estate investing? Yeah, York's not bad. It's hard to cash flow in that area. We talked about that question. We talked about this question. Do you have a team who helps you? Robert asks. Yes, I have a partner who owns half of the property management company and the investment company that we're doing now, where we're buying deals and working with investors like you guys to help you unlock better returns. I also have a bunch of people in my Rolodex or on my phone. Rolodex is just saying I don't have a Rolodex, I have a phone. But in my phone that I can call, like plumbers, trades guys. Yeah, I have a team of people to get the work done. I don't physically do any of the renovating work, so I have a team of people to get stuff done. I would love to eventually build a big enough team where I had multiple property managers. Soon as we get a little bit bigger, like 25 more properties, we'll be hiring someone on full time to work through the property management stuff probably. And we'll need to be hiring more maintenance guys on call. So we are building the team. I do have the systems in place. Right now, it's a couple of men show. You know, I think we probably have like 5 people working on a consistent basis, and they're not really employees, they're more independent contractors. But yeah, that's sort of the team that I've got going right now, and it's good enough for what we have. And we have we're working on exploring getting some virtual assistants for like $5 an hour. You get them to do a lot of the cool tasks like Airbnb stuff, some of the administrative posting of ads to rent out units. So take advantage of the cheap labor over there and feed a family over there. So I'm a big fan of that. It's a lot cheaper than minimum wage too, and they get the work done, and they only pay them if they get the work done. I like that. Okay. Well, I'll take off tomorrow. Jonas, that's great. Yeah, that'd be great. Jeremiah says, hey Mike, what's up? Hey, how's it going? Thanks for checking out the video. Awesome. Glad you're getting some value from it. Jason says, oh damn, that incognito mode. I'll keep that in mind. Yes, that's one way that you can view. I guess you guys are subscribers, so, and you're not me, so if I'm viewing my own video, I have to view it in incognito, but you guys don't have to, I don't think. But multiple tabs, I don't think you're allowed to have open. I don't think they all get to count towards it. Harks Creative says, yeah, it's coming through great, awesome. Dylan says, I've heard that tablets are also good to live stream to Instagram and YouTube on. Interesting, Dylan. I hadn't thought about that. Maybe I should get a tablet and try that out. I even hear there's a plug-in thing I can get and plug in my camera into my computer and stream direct through Ethernet. I'm going to be putting my internet box like back here behind this desk at the end of the month. So maybe by the next stream, it'll be even smoother. Fingers crossed, guys. I guess we'll find out. You guys say it's sounding good. Lighting is tad dim. We changed the lighting. Everyone's blaming Rogers. You can blame my phone, blame Rogers, blame whoever you want. Just don't blame me. No, seriously. I try my best, guys. We talked about that, Robert. Great question about having a team. You need to have a team in place to get to a certain size. It's impossible to do everything yourself. And at a certain point, I don't want to be doing low value tasks anyway. Stuff that's $20 an hour work, I should be outsourcing anyway. It doesn't make sense for me to be doing that. I should be doing the high value work. Some guy, how you doing? We talked about the first property I bought. I'm gonna do a video on that for you guys. Michael Chung jokes about the heated marble slabs, but I was talking about spending on the floor in the bathroom because it's such a small square footage. Darius says, if someone could afford 10 plus units, Uncle G style, versus multifamily 4 units or below, why would you suggest someone not get with the 12 or 10 unit outside of down payment institutional investors? You guys have heard me talk about this, Darius. Check out one of my videos I did a while back. It's got a cheesy thumbnail, me talking about residential versus commercial, but some of my thoughts on residential versus commercial. Eventually you get big enough, you have to go into commercial, but exploit residential before that. So max out the number of mortgages you can get residentially before that. And then once you've maxed out the real estate you can get in residential real estate, then you likely have to move into commercial at some point or work with investors who can then get mortgages on residential. But yeah, there's just, the margins are slimmer on commercial, the deals are bigger. So you have a huge, 20% margin times a huge deal. So that's something to think about. There are pros and cons to both. Here in London, you get taxed through the ass on commercial stuff. Okay, Mike, will you ever start a YouTube gaming channel on YouTube? Michael Chung, I don't game like I used to. I used to be a big World of Warcraft player. Star Wars Galaxies Online was my jam. That was my favorite MMORPG. When they closed it down, it killed me inside. I spent too much of my life on that game. World of Warcraft, League of Legends, Age of Empires 3, Age of Mythology, all these games I love to play, some RTS, some MMOs. I would love to get back into gaming and sharing that, but honestly, I think I get most of my joy from the game of real estate. Again, it's actually a game to me. I have a lot of fun, and I base how well I'm doing in the game based on how much money I'm making. So it's like a scoreboard of how much money I'm making my investors and how much money I'm making myself. And it's like a big MMORPG. So I've actually created the life I kind of want to live, and I'm really quite content with the life that I have now, in the sense that I feel like I'm playing an MMORPG and I'm playing my own character. When I was a kid, I played those games because I wanted to escape my reality. I had a terrible growing up, and it was a nice escape to go into an MMORPG and then be like the master of Shadow Moon server on World of Warcraft. I was like one of the top players there, and that felt really good. And now I'm realizing in real life I can do the exact same thing, apply the exact same principles that got me to be the top in World of Warcraft or in different MMORPGs to real life. And so I might do a couple of videos. I heard Vanilla WoW is back. Man, I'll see you in Azeroth. Tiger Pro. Yeah, I mean, a little Arctic Valley, a little classic level 60 PvP. I was a hunter and a druid. I had 2 level 60s, but my first one was a hunter. I had a lot of fun. Some of the classic raids and classic PvP back in the day on World of Warcraft. But yeah, I mean, my reality is good enough that, yeah, I probably will get back into gaming at some point, but the gaming that I would do on the YouTube channel would be like me. If it was me gaming for a bit, I would stop and relate to how you can take X or Y skill and apply it in your real life, because, real life's a game too, and you can actually gamify your life to be super successful and unlock fire. And until you unlock fire, that should be your priority. Okay, I need to keep going faster. What will Mike Rosehart be doing with 10 plus years of macroeconomic growth starts to fall? Are you just going to buy some great deals and hold them in a recession/rent? Then another time of prosperity, you sell them. I mean, in time of a recession, I double down. So if the real estate market crashes here in London, I'm going to start buying properties like you wouldn't believe. I'm going to buy the most cash flow heavy properties you have ever seen. I will build the biggest freaking empire you've ever seen come the next recession. It is hard for me to find deals in a hot market. Contrary to popular belief, you want to be investing in a down market. So the next recession that comes is when I can get deals 50 cents on the dollar. And when you're buying for cash flow, you don't care about appreciation. Then when appreciation happens and you unlock all of that value because you bought so low below market and you add all that arbitrage value plus appreciation in the market, when all those things come together, you'll probably see me reach in my lifetime $100 million net worth. Like I'm fairly sure I will have what 6 figures is $1 million, 7 figures is 10 million, 8 figures is 100 million. I will have an 8-figure net worth, like guaranteed. It will happen 100% in my lifetime. I don't know like if it'll happen by 40 or 50, but it will happen. I respect money too much to not continue to grow my money. And I enjoy making people money. I enjoy helping. Financial planning is something I really enjoy. So when I make other people money and create value for other people, they're going to want to pay that back to me. So really excited for what's to come in the world, and excited to share that journey with you guys because you're on the ground floor. We've got like 1,625 subs or something. So at some point, hey Max, how you doing? Good to see you on. At some point, I'm gonna if I just stick with this and I produce better quality content more consistently. I know I've been doing a terrible job at that because I'm so busy growing the real estate empire, but eventually the real estate empire is going to pay for me to have better content here, better camera, better equipment, better everything, and unlock more time. So eventually I'm going to have really good content here, and you guys are on the ground floor, and 10 years from now, I'm sure I'll have 100,000 or 1 million subscribers. So that'll be cool. And there'll be a whole fire movement, hopefully in London. So really excited for all of that to come. The Conor McGregor of real estate, maybe. I guess so. Right now, I'm just some FI guy, the youngest one in North America. But my flag's not planted and no one knows who I am yet. So I still walk the streets and no one knows who I am. They think I'm some punk. I walk into an open house and they're like, yo, where are your parents? Seriously, like they say, where are your parents? And I say, oh yeah, no. And I leave. No, then I buy the house. Okay, then in another time of prosperity, Salam, we talked about that question. What do you think of Floyd Mayweather's $18 million watch? To be honest, I was in his shoes. I would not buy that. Yeah, no, I would not do what he's doing. I know he was making bank, but no, that is insane. I guess high value quality watches do hold their value a bit better, but I had to go grocery shopping. We said bye. Make a video on adding and bringing value. Yeah, can do that. Check out the mentorship video that I did, Darius, way back. That video is a great one on that topic. Any thoughts on land development investing? I talked about that, Paul, a little bit. You guys are saying hi to Emma. She came in and said hi. I gave her a little tickle. Please repost this. Can't wait for the course. Awesome, Jared. Thanks. What stocks do you invest in now while you save for real estate? So Tiger Pro, I have a few stocks that I follow, but probably if you're saving for real estate, you're in it for a shorter time horizon. And so you can't afford the volatility when you find a real estate deal. So I would say just be very diversified, be very careful what you're investing in. Look at your time horizon. That's the most important thing. If you have like a 10-year time horizon, doesn't matter what you invest in because you have time for it to recover. As long as you're diversified, the equities will come up. But if you're looking at a 2-year or 1-year time horizon, might park it in something that's more of a fixed, safe kind of investment. Okay, let's hit this. Okay, best books for real estate. We talked about that. When value is clear, decisions are made. Great saying. What is your favorite food? Favorite food. You know what? I eat a lot of unhealthy things. Haagen-Dazs is a guilty pleasure for me. I need to cut it out. I need to go dairy-free or something because my body does not agree. But I just love it. I might even crush a Haagen-Dazs container tonight. I know I shouldn't. It's like $6. It's not frugal, but we all have our guilty pleasures. I don't drink. I don't smoke, so I have Haagen-Dazs. Of course I can afford it. That's right. I can afford that small luxury.
Coffee's mine, so.
There you go. Thank you for the video, Mike. Great as always. Have a great night. See you later. One last question. If you have a skunk bugging tenants, who is responsible for it? Me or the tenants? Looking like it's living underneath our neighbor's deck. Under the neighbor's deck, it's difficult. Even if you can hire a pest control wildlife company to trap it and they can release it far away, that's an option. That's the only legal option. It's kind of a gray area. Like it's not even on your property, so it's not really your responsibility to deal with it. But if you want to keep your tenants happy, you could work with your neighbor to get a wildlife company to remove the skunk. Yeah, there are other home DIY ways to do things, but they aren't as sure thing. How many properties do you own right now? Robert asks. I think we'll call deals that I own with investors the properties I own right now too, right? I guess only 8 right now. I've bought 25, I think, roughly. If you include a couple that I don't own in my name anymore, that my partner owns in his name, who I bought and transferred over to him, and a few we own in the company. So not that many properties actually right now. For me to scale up, it's going to be a huge difference. Yeah. Okay, let's hit some more questions because I really got to go, guys. As always, it's always the last crunch right to the end. How long does it take to make a cover letter? Not long. You got a template ready. It's very similar each time. You spend 45 minutes. Jared's following me speak really quickly. Andreas Anderson 86. Doesn't take long to create a cover letter, and you can write one up, like a page cover letter in like half hour. How much is your salary for a year? I don't work. I don't have a job, but it was $50,000 a year, then $55,000 a year, then $60,000 a year plus a small bonus. So yeah, I just saved 100% of that through those 3 years that I worked in Infotech. And before that, I had odd jobs making 25, 30,000 on average a year, but working a bunch of different jobs. Saving money during university is huge. I made money going to university, get done, very huge. Scholarships help a ton, keeping your grades up. Very, very important. My daughter's having a freak out in the background, so I really got to hurry. How many hours do you spend working a day, Robert asks. Depends on the day. Like my day is like a hurricane, like it's like a storm. It'll be just like beautiful and sunny and there'll be nothing going on. I'll be hanging out with my daughter and then my phone will ring and I'll be talking to 2 investors and a deal will come up and a tenant issue will explode and a contractor will walk off the job and an inspector will show up and everything else is happening and then I'm getting 100 texts about all these problems and then it's calm again for 3-4 hours and then it blows up again and then it's calm again, then it blows up again. So my day is like a roller coaster. 7 hours over a 15 or 16 hour period. Because I'm waiting for a text to come back and I'm just kind of hanging out for 5 seconds. Like I'll have 30 seconds working, 30 seconds waiting. I could be more efficient and I should block my time more efficiently like I used to do and really run my life under a calendar, but I just hate the feeling of being bogged down in the scheduling. I just don't enjoy it. So yeah, that's why I don't block my calendars because I wake up in the morning seeing a calendar that's blocked and I feel like I'm working again and I can't. Some days I wake up and I'm like, I'm doing nothing today. Like I'm actually just gonna take the bare minimum number of calls I have to take today and that's it. And I get my guys working and I have good people in place and I rely on those people to kind of get things done. You're in Barrie, Ontario. HC says, in Barrie, Ontario, most of the real estate is expensive. My brother has a large lot and makes sense to build. Yeah, it could make sense to build a garage and put in, you're talking like a guest house kind of thing. Yeah, could make sense. Or just rent the garage out, storage space. Classic World of Warcraft, we talked about that. I would definitely watch. Some guy says, look forward to talking with you, Mike. Green Sequoia says, hopefully we can set up a call soon. Yes, we will set up a call 100%. I saw the money come into PayPal. That was so cool. Like when someone sends me money, that's so awesome. We're definitely going to chat. I chat with enough people for free, a lot of investors and stuff. So it's very cool to chat with someone and be paid to do that. Someone that values my time. And once we get the monetization going and some people can super chat me, oh my God, that's gonna be so cool. Because I see it's like a video game, right? And I answer the questions right. It's like a Jeopardy or something. It's like, oh, I get like $5 or something. That'd be cool. I might even pay some friends to pay me, but just for the feeling. Max Karg says, definitely you will. Zeka status. Hey, appreciate that. I believe in myself, but we will see. Depends on the day that you ask me. Some days I'm less confident. Some days I'm more confident. Yuri says, how is the real estate market currently doing in London? Do you analyze any of their cities? Do you expect market correction in Canada soon? Meet Kevin posted video on slowing sales real estate in the US. It's a time of year in London where every July and August things do slow down and it's just the nature of the beast where at this time of year you get your best deals. In my market here. Again, it happens in late November, December-ish, no one wants to move. Then into January, second week, it starts picking up again. We get hot with student rentals and our market kicks off again. And the spring is super hot. So seasonally speaking, it's the lowest time of the year. Most people are traveling on vacation with their family or, et cetera. Kids are off from school. No one really wants to move in the super heat of July and August. It's past the spring rush. Most people have sold their home and found a new home already. So there's typically the volume is lower now. I often see the best deals now People who wanted to get in, there's a lot of people who saw the market heat up in the spring but couldn't get their property ready to list it till now. So now there's a whole bunch of people who wanted to sell in May and April, just couldn't. Now finally getting their properties on the market after all the paperwork and all the crap. So now they're coming up and we're getting a good supply of properties. And the demand isn't quite. There's pockets that are still a multiple situation. We're getting a lot of multiple offer situations still in London. Things are still crazy in London. Toronto, Vancouver, places like that, we're seeing cooling. London, I'm not seeing that as much. I wish it would cool. I would love a bit of a recession. Not a lot, but I'd like to see things feel like 2014 again. Like 2012 to 2015, which is fantastic. I could really negotiate great deals. We could kick the offers back and forth. This is when the best agents, this is when you actually have good agents. Because right now, like any real estate agent could put in an offer and it's like a blind freaking bidding war. There's no skill in that. And I'd like to see a lot of those agents lose their jobs. Not because I want to see them lose their jobs, but because they suck at what they do. And I want to see them punished. Bad flippers and bad agents and bad real estate investors have been making a ton of money since early 2017 here in London because they're just bad flippers. They don't do a good job, but the market appreciates so much they still make money. And so I want to see those people get punished because I don't think that the market should reward bad behavior. It should only reward people who play well in the game of real estate. And so I don't know, that's just my anecdotal opinion. There's enough money for everyone to be made. And so, ton of cash flow to be made here in London. So even if we had a bit of a recession, I would still continue to buy cash flowing properties. And I'd actually be able to buy deals and negotiate and work good deals out again because it's hard, more and more challenging to get those deals. So I would love to see a bit of things slowing down, but London is not. Unlike Kevin's market, London is not slowing down. So meet Kevin's market is, he's in Ventura, California. I don't have that. Hopefully, if interest rates keep rising, Bank of Canada keeps increasing prime interest rate, we should eventually see affordability decrease. Problem is people have money. A lot of the top 20% of Canadians have a ton of wealth, right? They're richer than they've ever been, and they're the ones buying all the properties, and people are still renting them because the bottom half still need to rent somewhere, and minimum wage has gone up a ton in Ontario, so people all have more money to rent. So I don't know, everyone needs somewhere to live, and London's a good place to live. So there you go. Sorry if that froze my screen there, guys. My battery just said it's getting low. I should plug in my phone. Okay. What's your net worth? Robert, you can probably guess what my net worth is. I'm not going to release exactly what it is. I no longer will release what it is. You can get a flavor for what it is. It's more than $1 million. That's all I will say. I'll let you guys know when I reach another figure digit. When I get to decamillionaire status, I might let people know, or I might not. I might just stay stealth wealth, and people will assume I have 2 million when I have 10. I'm no longer going to release my net worth. It's suffice to say I'm now FIRE by all definitions of the term. I'm way more than 4% rule. We talked about how much I work in a day and what a day looks like, and I should really do a video on what a day looks like in Mike Rosehart's life. I should add that to my topic video list. What do you think about the real estate market in York region? I did talk about that a little bit. I don't study the markets other than London, really. I hear things from agents and people that I know in other markets, but I'm not qualified to give an opinion either way. I think that what I've seen is that the properties don't cash flow there like they do here in London and they do in other markets. So for right now, I would say if you live there and you want a house hack, maybe buy a house there. If you're going to build a rental empire, probably wouldn't do it in Toronto area unless you're buying under market deals, in which case you're buying from arbitrage, you're more flipping than anything else. Someday we will see. I will be this kid with a baby face who walks in someday and it's got like this billionaire net worth. I'm gonna be like 50 and look like I'm like freaking 12. It's just because I can't grow a full beard yet. Like you guys can see, it's close. Just straggly, guys. Just straggly. Someday I thought I was gonna grow a beard, and I'm 25 yet, and still I grow a mean goatee. You guys ever seen, like, if I really let it grow out, it does grow quite long. But my wife will not let me grow it out. Same with the sideburns. She won't let it happen. We're just getting troll now, guys. I think the Wise Wolf Wednesdays is coming to an end. I like these the best. I love the troll part the best. Jason says, no way, still going. Yeah, that's right, Jason. I'm still on here 114 minutes later. We're getting this watch time up. The audience gets what the audience wants. You guys are the loyal subs. You get what you want. Within reason. Yeah, I won't say my net worth anymore, guys. sold his World of Warcraft account. You know what? Someone stole my World of Warcraft account and I got it back. I never sold it. I should have. At the prime, before the new expansions came out, I could have sold my accounts for probably about $1,500 USD. I didn't. I just kept it because I figured I might still want it. Yeah. In real estate. Okay. Save. You don't want to hear this, but find a way to live very frugally. Obviously, living with your parents is a way to do that, or house hack with some friends, or rent hack, and just save like an animal. Like, keep your expenses super, super low. Just save everything you're earning. You should have a ton of tuition credits because you just graduated school. So that 40K should almost be like, after CPP and EI, you should bring about 37,000 net because you don't pay any tax. You're gonna get a huge refund. Reinvest all 37,000 of that in an ETF portfolio and in equities. Start there. In a year, you should have enough to buy a property in London. So there you go. Or invest in a REIT, publicly traded REITs. You get your 10% rate of return. It'll grow from 37,000 to 40,000, and you'll save another year. You guys are being troll. You guys follow my Instagram. Living with parents and not buying 3.5 Domino's pizzas. $3.50 Domino's pizzas for the 35th anniversary last year. Check it out on my Instagram. I picked it up. I felt like death after I ate those pizzas, but they were so cheap and so good. Not good for your body. Pepperoni is like cigarettes from a carcinogenic perspective, and I know this. Anyway, okay, we're gonna wrap this up pretty soon. Jason talks, he speculates about my net worth. I'm not going to acknowledge, or he says 100 at 20 and doubled every year. And from 20 and 25, I also worked. So I was making 60, 55,000 a year and saving almost all of that as well. And my real estate portfolio was growing. So you can speculate what my net worth would be. If someone worked for a period from 18 to 25, made 50 grand a year, they would have theoretically made 350,000 plus growth. You know, over 7 years, it should have doubled. So even invested in the stock market, someone with my savings rate should have at least 500,000. That would be the very minimum. And now if they invested in real estate and did better than 6% rate of return, and picked up some side hustles along the way and made money doing those side hustles too, add all that income in, and had a wife that was also making 37,000 a year over that whole time and saving most of what she earned, you guys can add up what our net worth is. And now today you can speculate what my net worth will be as it grows from whatever it is now to a 9-figure net worth, 8-figure net worth. No, 9-figure. Let's go for $1 billion. Anyway, guys, I really need to get off before more questions come in. Thanks for another fantastic Wise Wealth Wednesdays. Thanks, Tommy, for tuning in. Thank you guys for the people who did stay this whole time. I appreciate you. 117 minutes. That's 2 hours long. Jesus. How does the season affect real estate? I just talked about that, guys. Check out Werner. Check out the recording. I talked about some seasonal stuff in real estate, but when people want to move and buy, you can listen to that in the recording. You'll see what my thoughts are on when to buy real estate and when to sell real estate. Obviously, sell in the spring, and when to buy. Talk about that. Why would you buy if in the city you live in is a possible 1% rule? Would you move from London if that was the case in your city? So yeah, I guess if London ever stopped buying for cash flow, I probably wouldn't buy properties for cash flow anymore. Or you can still invest in Toronto. Like, there are guys who are killing it in Toronto, but they're finding deals below market value. So they're finding properties that are worth $1 million for 700,000 on purchase, and they're doing a little bit of 50 grand in renovation, and they're making that huge amount of margin. As long as there's enough cash flow, I think you're covering your costs, you can still flip. You just can't do the buy and hold strategy as well as you can in London. So you can still do it in Toronto. You can still do it in New York. People still do it in all those markets. Just don't do it as well. Just isn't as good. The returns are lower. You can still make money doing it. If you're a savage, like if you're just really good at what you do and you hustle hard, you can get money in any real estate market. I truly believe that if you have the skills. Uncle G, and now we got Cousin Mike. Uncle G and Cousin Mike. That's right. Cousin Mikey. Okay, we're going to wrap this up.
That's pretty much all the questions.
Yeah. You can guess whatever you guys want, Michael Chung. I'm not going to admit either way what my net worth is, but we know it's more than $1 million and that I am financially independent. The only thing that really matters is that I am financially independent, guys, and I have more than what I ever need. My passive income is high enough that I can sustain my living forever. So I could just talk to you guys and do no real estate deals, and I'd be just fine from a living perspective. So anyway, we're going to wrap it up. 119 minutes. guys stayed the whole time. I'm super, super appreciative of all of you for staying this long. For the 14 people that stayed, we had 25 at one point. Thanks, guys. As always, remember to spend less, earn more, and maximize returns. Those are the only 3 levers you have to increase your net worth. But getting into Facebook arguments on this, that is the equation. Like net worth, delta change in net worth equals income, right? Like all of your income from all sources minus all your spending from all sources equals your change in wealth. So guys, there it is. That's what it is. Those are the 3 things you have to play with. If you don't want to spend less, you've got to earn a lot more and learn to maximize your returns in that order. Spend less, earn more, maximize returns. Mike Rosehart out, guys. Cheers. Happy Wise Wealth Wednesdays. And if you're catching the replay right now, I want to hear it in the comments that you made it all the way to 119 minutes and 43 seconds. Cheers.